Selling painkiller, they reported higher profit on demand for flu vaccines. So all of these stocks to keep a watch on at the open, Anna.
Yeah, a few stocks then with numbers out, and they could move on that. The broader dynamic then, it does feel as if we're bringing the week to a close. We're a little quieter in terms of those earnings stories than we were earlier on this week. Lots more of that next week, though, still to come. For the moment, eyes on Friday. Let's have a look at where we go on these European equity markets at the start of trade. As we've just been talking about, Chrissy, expectation then that perhaps we see some weakness in the German market as a result of that number out of Mercedes, by which I mean the return on sales number, which did seem to come in pretty weak, lower than the expectations or the targets that the market has and the business has for itself. The FTSE 100 looking pretty flat, looking to see if we get any movement in NatWest on the back of that beat on a host of numbers coming through from the UK bank. But broadly, things looking pretty flat. We had a bit of in terms of the global equity market story, we have seen higher yields, of course, at the start of the week, and that was making some markets a little nervous. And we saw the US equities, for example, selling off in the middle of the week. We're not seeing the DAX trade yet, so we will still wait for that. Chrissy, what do you see under the hood?
We're seeing pieces of the DAX trade, I think is the way to maybe phrase it. And we are, of course, keeping I'm going to say this right. Our eyes out for Mercedes. This isn't going to be an interesting one in terms of whether or not we do actually see the rest of the markets take its cue from Mercedes, some of the other automaker stocks right now. But when you look at the downside performers, Anna, it kind of feels like a lot of this is isolated in some of the sensational six that are not so sensational this morning. The idea here that Novo Nordisk is going to be your biggest index weight right now. A little bit of a mixed picture when you look at the sector perspective. Technology and banks seem to be your outperformers. I'm not sure if we can read anything from the sector breakdown.
Yeah. I'm not sure it's telling us a huge deal. Sorry, Lizzie. Yeah, Basic Resources doing okay.
Yeah, NatWest, the best of the banks, higher 2.6%. So as I say, off the back of those results, leaning more on the net interest income aspect of their earnings than the loan loss provisions, which were actually higher, slightly higher than expectations. But you've also had improving guidance for the year. So therefore, hence why banks are the second best performing sector on the Stoxx 600 this morning, higher 0.25%.
Interesting. Yesterday, we saw some weakness coming through from the French market in the shape of Michelin. We talked about that a little bit. The tyre maker was under pressure. Today, we see Vinci, the construction business in France, under a little bit of pressure, not by quite so much, but down by 2.9%. So that adding some weakness to what we're seeing in the French market, which is down 0.1%, underperforms the rest of Europe just a little. But it seems that their revenues at Vinci missed estimates. But analysts saying that the momentum there is generally intact. But that adding up to a 3.2% move to the downside.
Yeah, it's going to be interesting when we see, again, we're waiting for Mercedes to open, we're waiting for Merck to open as well to see how the DAX trade. We'll probably give it another couple of minutes to see how that all shakes out. I think it is crucial, though, that you are seeing pain in Safran as well. This perhaps is a little bit of a hangover from the Boeing story that we got in the last 48 hours as well. Just given that's in the supply chain, that's going to be something we keep an eye on. Sanofi, on the other hand, rallying higher by 2%. It's your biggest volume, I think, mover to the upside as well. Now we've got Mercedes, a quote on Mercedes, down about 3%. Again, those cost-cutting measures, yes, they may be trying to be more profitable. Yes, that might be a good thing. But right now, investors really zeroing in on just how much pain there actually is. And that's going to be something we're going to be looking to previous elements or previous moments in history of whether or not they can actually survive that. Let's take a little bit of a zoom out if we can, though, and talk a little bit about how we go forward from some of the bigger heavyweights around the world. Aquamarine founder and CEO Guy Spier spoke to Bloomberg earlier today.
You know, this is a very, very long-term game. So the Nifty 50 in the 70s, you know, they fell apart. And it looks like the Magnificent Seven aren't going to fall apart anytime soon. And by the way, about 2 years ago, in frustration, I ended up buying some Google. So I'm a little bit participated in the Magnificent Seven. But the world is big and the game is long. So don't worry about me.
The world is big and the game is long. Let's bring in another voice here who I'm sure agrees with that statement. Natasha Ettehad, founder manager over at Artemis Investment Management, joins us around the table. All right, so the world is big. We have plenty of time apparently on our hands. How do you then trade going into the end of the year? What is the trade you think is the one to do?
Well, going into the end of the year, we've seen a trend that markets are starting to broaden somewhat. A lot of this year, the trade has been very much focused on the AI supply chain. Well, our supply checks indicate that actually probably is a trade that will continue into 2025. But other things are now coming into focus. So we're starting to see the foundations of a global policy pivot, not just the US, the global policy put. So not just the US cutting, Europe cutting, lots of central banks, now China coming into play. And essentially we feel that policy put is going to flow more into the fundamentals of more sectors and more companies helping earnings lift. And so we're trying to broaden out some of the sectors where we're hunting. So US house builders is somewhere that's been interesting. We've been adding there in recent weeks. Rates coming down, less uncertainty post-election, and a structural underbuild there is an interesting sector. China, it's now back from the uninvestable dead. That's somewhere we've also been adding. And so those are areas which we think could continue to do well into 2025. And there's new areas as well, like potentially the consumer. We're maybe starting to see a turnaround in some of those staple stocks where volumes have been under pressure after years of too much pricing. Looking for opportunities in areas like that.
When we talk, I'm going to zero in on the home builders piece as well, because so much of that sector is dependent on actually the bond market, which has been a major theme here, and that you look at the long end of the curve. But the long end of the curve is also extremely vulnerable to what's going on with the U.S. deficit as well. Why are you so confident on that home builder trade when it could be quite vulnerable just in 3 short months?
Yes, no, I mean, rates and equity markets is not really a perfect tango. I mean, we're looking more at interest rate expectations. Here we've actually seen probably interest rate expectations fall now for the majority of this year so far. I mean, it's been very up and down, but the general direction has been down. We are ticking up again, maybe on where we think the rate cuts are coming from. But in general, that rates, we do expect that trajectory to continue to trend downwards. And the fundamentals of these companies are still strong. And we expect that to pick up into next year.
Can I ask a bit more about China? What convinces you then about China, Natasha? Why are you convinced some we talk to are and others are not?
Well, China's an interesting one. So many people have said it's uninvestable, but we really do think that this policy pivot is meaningful. The areas how it's very coordinated. Xi Jinping has put his face and his name behind it, and that is targeting certain areas of the economy where there is structural problems. So housing, for one, trying to tackle that. And the equity markets where we have seen but those that coordinated effort together to hopefully lift the economy away from deflation. So those areas as a whole, we think should continue to help support the market. And more broadly speaking, it takes out that left tail risk that we've had in China. And that's backstopping economic growth. And so how we're playing this has really been in some of those consumer stocks where we think this next round of stimulus will be more focused.
Okay, that's interesting that there will be that consumer effect, because that seems to be where some people, even and certainly you speak to luxury CEOs, they're just not sure whether this is going to play out in that way for them just yet. So that's China. Thinking about Europe, I noticed from your notes ahead of our conversation, you talk about being overweight Europe on stock selection, and yet, you know, the outlook for the European economy is perhaps not great. But how do you link those two together?
Well, the macro is not the markets. It's always about the stocks. And here we see certain companies where we feel that they will continue to do well. Looking into next year, actually, the economic growth is expected to recover from quite a low base for Europe, and that we expect should help the economy to some extent. And the fundamentals in a lot of these European names that we've picked, we think will continue to flow through.
So I get that the macro isn't the micro, but to what extent do you expect that gap to close between European equities and the US if the economic picture changes, as you say?
Well, I mean, in the end, versus the US, it's hard for the European companies. I mean, for many years now, the US has outperformed Europe, and a lot of that has been just on the quality of those companies, and especially the tech sector. The margins for those tech companies have just been continuing to expand. They've had those very friendly shareholder return policies where we've seen a lot of share buyback, and the valuations, while they're more expensive, maybe more justified with those higher returns. So I think there's more of a question as how sustainable those returns are going to be in the long term to help that margin differential, the returns differential sustain. I think that's the question, and a lot of that hinges on the AI spend. Does the next leg of AI spending in the US mean more capital intensity, lower returns for some of those big tech companies, and that will have a reflection on the market and how the market performs.
The other thing I noted was that you'd shrunk your Japan positions since the summer. We've got this election coming. Are the two connected?
Yes, there is an election coming. For the election result, we think it's very much BAU, so business as usual. Maybe you could say boring as usual if the LDP do come back in, if they're in a majority or in a coalition. We've been shrinking our positions more on a stock-specific call, and we remain more exposed to the exporters. But here we expect from the LDP to return back into government. Shiba wants to enact more radical policies of higher rates and more tax. But in the end, we think that the party politics within, there are lots of factions. He doesn't have the support. He doesn't have the popularity. And they've got an upper house election next year. All of that, I think, is going to limit what he's going to be able to do. So I think it's going to be business as usual. The rates will start to normalise slowly there. But we may remain focused on the exporters, where we think that global policy put is going to help support that more broader global and macro environment.
You made a key point, which is that the United States tends to outperform Europe. That isn't always true in terms of cyclical, when there is a cyclical rebound. That's when Europe kind of gets their time in the spotlight. If Europe isn't poised in the next couple of years, at least that's the consensus here, that to outperform the United States, does that mean that we're not in a, where are we in the cycle, I guess, is perhaps the better question?
So I think it goes back to whether I think the US continues to outperform. I think Europe should pick up because the growth is is recovering, and that should be, given the more industrial focus to the market, that should flow through the fundamentals of those European companies, and you should start to see the improvement. But I think so much rests on what happens in the US. And the market's so concentrated in those tech names, whether those earnings do continue to come through, the returns aren't destroyed by or lowered because of that AI capex spend ahead. I think that's more of the key question to ask as to whether Europe does start to outperform the US. So the US has to underperform on fundamentals, I think, going forward.
Thank you very much. Thanks, Natasha. Thanks for joining us. Good to speak to you. Artemis Fund Manager Natasha Ebtehaj. Let us have a quick look at the Core 6, see how they are faring this Friday morning. Looking for any read across from the big news earnings stories we've been covering today, the likes of Mercedes, for example. Not sure it's entirely evident in this lot, though. We have some downside coming through on the luxury space. LVMH is a little weaker. Nestle also weaker. ASML a little upside, of course, on Schneider Electric and Ferrari. Let us get some individual stock moves then. Joe Easton has a briefing. Joe.
So Mercedes is declining in Germany today, and adding to the declines that we've seen over the past couple of weeks, given the warnings we've seen from the car space. Now, analysts at Citigroup writing that they are amazed by the decline in interest margins at this company, given the higher cost from their debt. So that is the worry, the margins, the EBIT margins over at Mercedes hitting the stock today, and it's falling at 2% at the moment. Then there's another big one in autos as well. This time we're over in the parts space. We've got Valeo down at 12% today. This is over in France. It's a parts maker. They make brakes, tyres, that kind of thing. And they are warning of weakness across all of their markets. So it's not just one specific market. It's Latin America, the US and Europe, according to the company as well. Then we've got Vinci. Now, Anna's pronunciation of that was much better than mine, but I gave it a go. I'm going to go with Vinci. It's down 3.8%. There is news from them in terms of them downgrading some of their guidance due to the higher tax rates coming in France, according to the company. So it doesn't look to be related to their main business, which is in airport servicing. Over in white goods, Electrolux hammered as well, the biggest drop since the pandemic days for the maker of washing machines, tumble dryers, that kind of thing. This is weakness in the US, though. They get around half of their sales in North America, competing with Whirlpool, and they have had a profit warning out of them this morning, hitting the wire. So that one slammed over in Stockholm today. Finally, a bit of green on this screen. Sanofi is coming up, given those better than expected vaccine numbers that we've seen from them. Also, some of their respiratory drugs looking pretty strong, according to that company. Then we'll check in on NatWest, because that was the best performer on the FTSE 100 in early trading, and it is continuing those gains this morning, up 4%. Bear in mind, as we showed earlier, it is up 65% heading into these numbers year to date, so continues to be the best performing UK lender, mostly because of the overhang of higher rates in the UK market, according to analysts. Then there's a couple of downgrades to bring you staying in the UK. We've got SSE. This is the utility company. Now we're down to sell over at Citi on this one. They are citing a slow rollout of the offshore wind business. They don't like that stock at the moment, so they do come down to sell. And that one falling 1.7% today. Then finally, Ryanair. This one very interesting because Barclays has a note on the Irish airline. Does, of course, have shares in London as well. But they say it's got the best profit margins across the entire European airline space and also one of the best margins in the world for the sector. So that one is actually rising 0.5% at the moment. Ryanair is a buy over at Barclays.
Joe, thanks. Joe Easton from our equities team with an update on some of those stocks that are moving. We'll get further details on the NatWest story coming up. NatWest upgrades its outlook for the year after earnings beat estimates. We get the latest on this morning's results and a strong week for UK banks. That's next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more. It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
from the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to the opening trade. 18 minutes into the European session this Friday. Doesn't have that Friday feeling, though. A little bit weaker across European equity markets, weighed down by some of the earnings we've had out from the likes of Mercedes and from the suppliers to the auto sector as well. We were just hearing from Joe about how some of the suppliers in that sector looking pretty weak as a result of some earnings stories coming out there. Let's talk about the banking sector, though, here in Europe. The UBS CEO, Sergio Ermotti, is warning fragmented banking regulation in Europe is leading to higher borrowing costs and lower shareholder returns. We know that some people, or Shell, for example, have plans to change that. Ermotti told us why he thinks the economy may ultimately end up paying the price for not allowing the free movement of capital, as he sees it, between European countries.
At the end of the day, the cost is paid by the economy, by clients. I think, of course, shareholders are suffering, but eventually cost of borrowing and the facility and the easiness of accessing credit is impaired. So allowing capital to freely move across jurisdictions creates less cost for the economy.
Is there a warning from the Credit Suisse saga? You've benefited from it on the other side. Your assets have increased. You delivered earnings that outperformed expectations. There is a sense that banks that seem okay are suddenly not okay in a very fast money world. Do you worry that that's the case elsewhere?
No, I don't worry, because if you look at the Credit Suisse situation, it was a very idiosyncratic topic that developed over the years. The business model was not sustainable. They didn't really have a great governance, and they benefited for too long from regulatory concession that should not have been granted, or at least not for so long. And that was a quite unique situation. If you look at what happened back in March 2023, banks, large banks, were actually safe haven, were part of the solution, in a sense, in the US, but also with UBS in Europe. So big banks were solid, and it showed that well-designed regulators can avoid the repeat of the financial crisis. But if you go too far, then you create costs, not only for shareholders, again, also for clients. When it's going to cost more to borrow, it's going to slow down investments, and so that's not the ideal situation.
There's a saying, and it's not mine, so you can't blame me or credit me, but that the United States innovates and that Europe regulates, and that seems to be the way and the path of travel, and it's the reason why a lot of people expect the U.S. to grow really significantly and less so in Europe. How much do you see that bifurcation continue with investor flows?
Don't worry, I'm not going to disagree on that. So,
okay.
It's quite clear. You saw it in the last 20 years. Numbers talks clearly, and the underlying trends seems to go still in the same direction. There is a desire in Europe to change path. You saw with the Draghi report, with a lot of very comprehensive report analyzing the state of Europe, with a lot of ideas that, unfortunately, are going to be quite difficult to implement. The reason is that you need 27 countries with quite different interests to agree on a common goal that may result in some of them losing short term for the benefits of the long-term benefit. And in this environment, it's very difficult to get voters to support any sacrifice. And so it's likely that you're going to continue to see the U.S. outperforming Europe.
The UBS CEO, Sergio Ermotti, speaking with Bloomberg surveillance anchor Lisa Abramowitz, talking about competition between parts of the world that we perhaps know and understand. Thinking a little bigger picture, we're keeping track of some SpaceX activity this morning. SpaceX Dragon is approaching splashdown off the Florida coast. We think we're around 7 minutes away from that taking place. The capsule is carrying a team of NASA astronauts. they're coming home after completing a 7-month-long expedition. I think they were supposed to come back a little earlier than this, perhaps in September, then perhaps in October, but the undocking was delayed because of Hurricane Milton in Florida, and they are going to be landing then, Critty, just in the sea near Florida, so we're keeping an eye on this. They haven't deployed their parachutes, I don't think yet, but we're certainly seeing them streaking across the sky.
Well, we certainly will keep an eye on it. Of course, this is, you mentioned they were there for about 7 months as well. This is the 8th rotation they've had to the International Space Station under NASA's Commercial Crew Program. Remember, this is crucial because NASA is now partnering with private space exploration like Elon Musk's SpaceX as well. And you mentioned the 4 astronauts. 3 of them are American. 1 is actually a Russian cosmonaut as well, Alexander Grabenkin as well. So this is going to be an interesting one to keep an eye on, especially as we talk about where this goes next in terms of SpaceX. We should mention there are still 2, I think Gilmore is his name. Wilmore, thank you, is the other one. They are still in the International Space Station because they weren't able to come out on that Boeing flight. SpaceX looking to bring them down as well.
Yeah, so in less than a minute's time, we're expecting them to deploy the drogue parachutes. And those 3 astronauts, the Americans that you mentioned, Matthew Dominic, Michael Barrett and Jeanette Epps. So we keep an eye for the next stage, the parachutes deploying. Then it'll be the main parachutes deploying. And then we're expecting the splashdown target time at 29 minutes past. So watch that spot on your screen.
Yes, I think they were undertaking scientific experiments, as many on the International Space Station do, weren't they? It was a scientific expedition. It included over 200 experiments. They encountered technical difficulties in September with the Starliner. That prompted NASA to bring the capsule back without a crew, and that's why we have those 2 that you mentioned, Critty, still up there. So continue to watch that. This all part of NASA's Commercial Crew Program. The Crew 8 mission is returning important time-sensitive research to Earth.
Yeah, it's a fascinating one. You talked about some of the scientific experiments as well. Some of them that included things like tackling degenerative diseases like Parkinson's, among others, some of the plant experiments as well, talking about how they can be grown in space. Things like 3D printing was as well. They really spun the gamut in terms of where you can see some of these kind of progress being made. Also, a historic moment, by the way, for Jeanette Epps as well, who became the first Black woman to live on the International Space Station. So this is noteworthy in a variety of ways.
Okay, there you see the drogue parachutes now deployed. The main parachutes come next. That should be in a minute's time. So there you can see them blowing in the space winds on your screen there.
Heading down to the seas around Florida. It's interesting. I've been talking to a lot of CEOs recently about a host of subjects, leadership amongst them and inspiration also amongst them. And it never ceases to amaze me the number of people, whether they're fans of Elon Musk more broadly or not, the number of people who find it truly inspiring to watch what he is doing and what this business is doing when it comes to space travel, space exploration, commercial activity in space as well. So, I mean, that's just one of the reasons why we keep watching this so intensely, I suppose.
Do you think it's because it's the biggest race you could possibly see, or because they're actually afraid that you might have to go and live there at some stage?
It'll be a fascinating one as well in terms of where Elon Musk goes next as well. We talk about this a lot in the context of the politics. How much private investment can Elon Musk do here? This is going to be a fascinating one. Again, remember, in just the last couple of weeks, he also was able to create that manned... I don't remember what it's called, but the thing that really kind of held the returning rocket as well. That is crucial. He's really making the case for a lot of the kind of investment from the government as well. Let's talk a little bit about the fact that we're seeing that the main chutes are now being deployed as well. They are inflating. So we are very close to the splashdown, I'm told. Fascinating moment that we are seeing on the coast, on the East Coast of the United States.
Reiterating then the names of the crew who are on board here: Matthew Dominic, Michael Barrett, Jeanette Epps and Alexander Grabenkin. I do find it also fascinating that you do have one cosmonaut on board here. There are certain parts of our economy, certain parts of our wider science community, I suppose, that continue to cooperate even when we see geopolitical tensions so extreme over the invasion of Ukraine, for example. So you've got a Russian cosmonaut on board this, and we've seen plenty of that at the International Space Station.
So just to put this into context, when those main parachutes deployed, the expectation was they would be about 6,000 feet in altitude, and the spacecraft would be moving at 119 miles per hour. So what we're waiting for now is the splashdown, and that should come at any moment currently, but when you had those drogue parachutes, that was about 18,000 feet in altitude at 350 miles per hour roughly. So you can hear in the control room there as we watch these parachutes deploying.
Let's just focus and watch that, shall we?
Great views from the WB-57 as Crew 8 is nearing splashdown.
400 meters. Copy, 400. Meters, bracing. Copy, 200 and braced.
At this point in time, the seats in Dragon have rotated a little bit to help provide a more comfortable and safer bodily orientation for the crew members as they come closer to splashdown. Like we said before, the capsule's going about 15 or 16 miles per hour.
And splashdown.
And Endeavour, we see the same. On behalf of SpaceX, welcome home.
And as you can see on your screen, we do have visual confirmation.
This team's what an incredible ride.
Again, we do have visual confirmation of Crew 8 successfully splashing down after 235 days.
We, of course, are just witnessing the splashdown of the SpaceX on the coast of Florida, a really monumental move from SpaceX, of course, bringing back 4 astronauts, 3 American, 1 Russian cosmonaut as well, back to the United States after an 8-month, almost 8-month-long mission where they were conducting experiments that tackled things from Parkinson's to 3D printing, etc. It's a really interesting time as well for SpaceX to be taking the lead on this, especially at a time we know that Elon Musk has been exploring this from the likes of Starlink as well, which really brings about not just the space exploration question, but the defense question as well, right here back on Earth. Elon Musk really taking the charge on both fronts.
Yeah, really interesting to see. I mean, stretched fiscal budgets where governments choose to spend their money, private sector stepping in some places. We see that very much displayed in SpaceX, don't we? The ability of the private sector to step in there, certainly Elon Musk at least.
Yeah, it's a fascinating one as well. And then I think that's somewhere where we want to go next in terms of zeroing on that topic of security. It is, of course, beginning a new daily focus on the issues in Europe most at risk of disruption by the U.S. election. We are getting very, very close to the run-up to November 5th. We're going to dive deep into the topics, including trade, energy, technology, all while discussing the unique challenges that the region could face under Kamala Harris or Donald Trump. We kick it off today talking about that topic of security. We just did it in the context of defense. Let's bring in a true expert on the matter, Peter Westmacott, the former British ambassador to the United States, France, and Turkey. A pleasure to have you. Thank you so much for joining us this morning.
Good morning. Pleasure to be with you.
It is a key sticking point that you're starting to see priced in these markets of what the security mandates of a new American president might look like in regards to Europe, whether it's in terms of protection with Ukraine, whether it's the relationship with Russia, how much of those government contracts relies on the likes of Elon Musk. In terms of Europe's preparation, even the UK's preparation on the defense front for the new presidency, what are you watching out for?
Well, isn't it nice, just looking at your previous story, to see Russian and American cosmonauts who's been together for all these months coming down safely, we hope, together. So, you know, Russians and Americans clearly can do certain things together, not just, if you like, call each other out. So, no, to be more serious on this, I think what the Europeans are looking out for is what does the result of the 5th of November really mean for the future of European security, but also of the managing of the major geostrategic crises that the world is currently confronting. So you've got the Middle East, the whole Israel, Gaza, Hezbollah, Lebanon, Iran, complex of issues, very, very difficult. You've got, from the European point of view, perhaps more important than for American public opinion, Russia, Ukraine. And I've talked to Trump foreign policy experts who say these days our top priority is actually Indo-Pacific, if European security is a big problem, that's fine, we're not going to get in your way, but it's probably more of a European responsibility these days than an American one. So if you guys want to help Ukraine against Russia, that's great, but you've got to shape up and carry a bit more of the water. So there's that issue, and what will the attitude of the next United States president be to confronting Russia with its, if you like, aggressive territorial incursions into neighboring states, notably Ukraine?
It's fascinating that you mentioned that kind of China piece as well, and what's going on in the South China Sea, because NATO has almost a very small presence, but a presence nonetheless in the South China Sea at the moment, and almost has that European exposure to a part of the world where the Europe continent geographically isn't located. How does this affect Europe's relationship with the South China Sea?
From the UK's point of view, of course, we have something called Hong Kong, which used to be our sovereign responsibility. We also have a kind of geostrategic worldview, and we watch carefully what is happening there. We've all been bothered about the 9-dash approach, 9-dash line, which China has tried to insist upon in terms of its territorial waters, gobbling up a vast area of the South China Sea at the expense of Philippines, Indonesia, the other littoral states. So that has bothered us, if you like, in any case, because of its effect on potential global security. The United States, United Kingdom, Australia now have this new defense understanding called AUKUS, where we're going to be building submarines together and cooperating in terms of trying to keep the South China Sea and that whole region safer against any aggressive intent. So all that is relevant. The United Kingdom might yet even get involved in the Pacific Trade Agreement, which the United States and the other littoral states are involved in. We're not a Pacific state, but there is Hong Kong, and we've been invited to play a role there. So that could be part of the future, if you like, trade policy priorities for the UK government. But otherwise, I think it is more a question of the big global issue: how do you manage the rise of China? Where do you compete? Where do you confront? Where do you cooperate? How do you manage that relationship? It's got many more tiers to it, many more layers to it, than dealing with a more simple and, if you like, in some ways more directly aggressive Russia invading a next-door neighbor. Right. China more complex.
Yeah, China more complex because the complexity of the interlinkages in the global economy when China is concerned much greater than the Russian story. Clearly, Russia was very intertwined with the global economy on energy and that sort of commodity, but less so when it comes to other parts of the economy. So thinking about China, do you sense, Peter, that, well, are Europeans and Americans not on the same page exactly when it comes to China, and does that matter? Will that become an issue?
United States, I think, much more important in China's eyes because of size, because America's still the world's largest economy, China catching up very fast, and that is a big challenge for the United States. For the Europeans, I'm not sure that we're on a different page. It depends a bit which government you're talking to. You remember not long ago there was a squabble between the British government led by Boris Johnson and the United States on Huawei. To what extent should we allow ourselves to be dependent on the technology of that Chinese company? In the end, we followed the same sort of line, partly because there wasn't much choice, because of the availability of the components. But I think that the Europeans are nervous about complete decoupling, even though we are following a similar policy of what I'd call de-risking in terms of our dependence. Supply chains are being shortened. It's partly because of the problems we had logistically during COVID. You couldn't get stuff. But it's partly about not being too dependent on China, which might at one stage in the future wish to interfere with equipment that it supplies, whether it's technology, or turn off the tap of supplies. So I think for the Europeans, China remains very, very important. We're a little bit less nervous than America, let's say, about electric vehicles. America's talking about Trump is talking about putting 50% tariffs on EVs from China. The Europeans are not there yet, partly perhaps because we haven't got quite the same level of capability in making electric vehicles in Europe that we're trying to get there.
I mean, there are tariffs being planned, aren't there? But they're still in discussion.
They're still in discussion,
not 50%.
and they're not 50%, precisely.
Yeah.
And we are very dependent still on a lot of Chinese components. And indeed, guess what? To keep down inflation, stuff you buy in China tends to be cheaper than if you make it at home.
So the complexity of the relationship between the EU and China might be more than EU-Russia. But the fear and the sort of very real sense that Russia threatens the doorstep of Europe is very real in Europe, isn't it? And I wonder, I was reading an opinion piece by one of our colleagues, Andreas Kluth, who was saying that the US will abandon Europe. It's just a question of when and how. You might not see it in such extreme terms, but your earlier answer led me to believe you do see quite a lot of validity in that viewpoint.
The view I take is that the United States' approach to global strategic issues, its own security, is pretty hard-nosed. It always has been. You know, Second World War, Cold War, America looked at its own strategic interests. What matters to us? For a long time, European security and the threat from the Soviet bloc mattered. So America put a lot of resource and soldiers and weapons and finance into Europe. Today, it looks at the world, saying to itself, we can't really fight a war on two fronts anymore. We're not prepared to. The biggest challenge, not necessarily the biggest military threat, but that could come, is the Indo-Pacific and China. So that's the top priority for them. I don't think it means that America's going to give up on Europe, or I hope it doesn't, because NATO is something which is extremely important, and European security does still matter to Europe. Look to America. Look, after all, at the importance of US investments in Europe. Look at the amount of trade. Look at the preservation of such things as old-fashioned things as the values we hold dear, you know, democracy, freedom, rule of law. Europe is still important, I think, to an America. I like to think regardless of who the next president is going to be.
Okay, because I was going to ask you, Sir Peter, would Europe have a more reliable ally in Kamala Harris?
Well, isn't that an interesting question? I think what we would get if Kamala Harris was to win is a degree of continuity. Of course, at the moment, she's having to show that she's not quite the same thing because 70% of Americans believe that their country is on the wrong track, and she's got to address that if she's going to persuade people to vote for her. But it would be a degree of continuity. She has been the vice president of Joe Biden, who is an Atlanticist. I mean, he's a Zionist as well. He's been very worried about the security of Israel, but he's also somebody who cares about Europe. So I think people would be broadly comfortable, and many of the people who the Europeans have been dealing with in the Biden team, I imagine, would be recycled into a Team Harris. I don't know who her top foreign policy officials would be, but there's some extremely talented people there who we are used to working with, who my guess is would remain there. If it is Donald Trump, I think life would be a little more unpredictable, shall we say. We don't know who the people are whom he would have there. We do know that they would be a bit more America first. But I believe that Europeans need to be realistic enough to understand that American voters care most about America's problems and don't really think it's their job to fix all the rest of the messes that the rest of us have made elsewhere. So I think there would be probably a sigh of relief in Europe if it was Kamala Harris. But I think that, you know, there are question marks about Donald Trump. I don't think he's going to try and destroy NATO. He's going to be difficult. He's going to be complicated. He may be a bit more protectionist. He loves tariffs. We don't care so much for tariffs. But, you know, it'll be a new world, and everybody will have no choice but to get on and make the best of it.
I mean, it was Conservative Prime Ministers when you were UK ambassador to the US.
Yes, and Labour ones when I was ambassador in France.
But I wonder if Keir Starmer, with his stonking majority, can afford to do a bit of a Hugh Grant impression in Love Actually, and if it is Donald Trump in the White House, stand up to him a bit more.
So far, what Keir Starmer has done is had a nice dinner for a couple of hours in Trump Tower with the candidate. Clearly a priority for him to ensure that that relationship is in good shape. There's been this little squabble, which I think has been a bit exaggerated, about whether or not the Labour Party should or shouldn't be sending volunteers to help Kamala Harris. Personally, I don't think that's a huge deal. But it does depend a bit on how the former president, the candidate Trump, reacts to that. And if he takes it very personally, and if he starts to be resentful about that, it could be a little bit of a problem to handle. But otherwise, frankly, loads of Conservatives and Reform Party people are helping the Trump campaign. So, you know, why shouldn't Labour volunteers be helping? You know, I don't think that's a huge deal. So I think it'll be okay. It'll be manageable.
Talk to us a little bit about this private capital story as well. And Peter, before I ask the rest of my question, I want to play a little bit of sound for our global audience about Jamie Dimon's view on what's going on in Ukraine. Take a listen to what he had to say.
We have to be quite clear that we can't have a bad outcome there. You know, if you travel around all a lot of other nations, that border Russia, they're quite worried. And some that don't border Russia are quite worried. And we've never had a situation where man is threatening nuclear blackmail.
Jamie Dimon there talking a little bit about just the geopolitics and how strong the threat is in terms of things like the nuclear threat that you are getting from Russia and, of course, the dire situation that is happening in Ukraine. The fact that Jamie Dimon is talking about that risk as one of the high priority for the financial sector, I think, is crucial at a time that we're talking about perhaps private capital playing a bigger role in this. And the reason I point this question to you is because you are also the chairman in your new role of TKO Capital here in the UK at the moment. And I'm curious, in absence of, say, a more unified defense approach from the United States and Europe, do you start to see more capital players like Elon Musk in terms of his approach to Starlink, Boeing contracts, others, play a bigger role in what the defense policy of the future looks like?
My sense, it's a great question. My sense is that the likes of Keir Starmer would very much like to see the private sector playing more of a role in addressing some of the public priorities of governments which are alarmed by what's going on in Ukraine, let's say. You've talked about Elon Musk and the extraordinary contribution that his satellites have been making to security. There are people who worry that Musk, with all his very, very strong pro-Trump noises and pro-Trump money these days, is it appropriate that he should be that much involved in government business and in government security consideration? I mean, it's quite a good question. We'll have to see where that goes. If it's Jamie Dimon or whether it's my friends at TK or others, I think that there are growing opportunities for public-private partnerships. The UK government, for example, which knows that it's got to do a better job of investing in up-to-date defense technologies and equipment, wants to make partnerships with the private sector because it can't all be done by the poor old taxpayer who has got to pay for debt, never mind for future investment. So I think, especially in the defense sector, but also in certain other infrastructure areas, there is a real role for private credit, private finance, private companies to work with governments to try to deal with some of the crumbling infrastructure problems and the deficiencies of our own defensive capabilities. So I think the answer is yes, and I think I know that Keir Starmer and his ministers are very, very keen to try to develop that side of their relationship with the private sector.
Certainly something we're going to be keeping a very close eye on. A pleasure to have you on the program, as always. Sir Peter Westmacott, the former British ambassador to the United States, France, and Turkey, and now the UK chairman of TKO. Coming up on the program, we're going to go back to the stock market. Mercedes planning to change gears after lower demand in China sends its margins into reverse. We're going to take a wider look at the auto sector, perhaps continue this conversation about the China impact as well. Stick with us. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Well, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
8:48 in London. You're looking at Mercedes shares down 2.9% this morning. The lowest performing sector on the Stock 600 is autos and parts. So let's get into those earnings from the car maker. It plans to step up cost reductions after fierce competition and weaker demand in China hit the luxury car maker's profits. And we can get more now from Bloomberg's Oliver Crook in Berlin. Ollie, take us under the hood. What are the standout bits of this earnings picture?
Yeah, that's right, Lizzie. We already knew from the profit warning that they issued last month that it was going to be a bad quarter. We knew overall their sales would be down 3%, largely due to China, which were down 13%. What we didn't know was just how bad the margin would be, because last year the margin for Mercedes-Benz was about 12%. Expectation for this quarter was at about 8%. What we got was 4.7%. And the margin is obviously crucial for all car makers, but particularly so for Mercedes-Benz, which has basically, as a policy, basically abandoned the high volume sort of game and gone just for really high margins. So seeing that in this quarter is really not encouraging for investors, which is why you're seeing the shares down now about 3%. And perhaps particularly unencouraging when you have Tesla that reported this week with a margin of 17%, right? Versus 4%. So that is going to be a very stark contrast. I also looked at the delivery numbers, and that actually Tesla delivered only 40,000 fewer cars than Mercedes-Benz. Again, putting that in the context of Mercedes-Benz, which is a company that's more than 100 years old, all of these things are going to be sort of put in focus. And of course, the market cap change in Tesla yesterday was equivalent to $153 billion. That is more than the market cap of Volkswagen, Stellantis, and Mercedes combined right now, which gives you a sort of a sense of how investors are feeling about the sector at this moment.
All right, Oliver Crook, we thank you. And let's go with that theme, because it has been an even bigger week for car makers' earnings in general. And we can break it all down now with Patrick Hummel, who's the head of autos research at UBS. Good to have you with us, Patrick. Just tell us your view after all of the results that we've had this morning on where European autos lie.
Well, they're definitely in a tough spot. We have, of course, cyclical headwinds. Demand doesn't look great for Europe. Production schedules are getting disrupted by the need for destocking. And there's also, of course, the structural element, especially for German car makers in China, where things are just going south because the local OEMs are gaining.
And do you see an upside coming in China when you've had this stimulus so far, when you are perhaps going to see a bit more strength for the consumer there? Or do you think that the focus will continue to grow on Chinese makers of their own cars?
I think China is a bit of a lost battleground, especially for the global mass OEMs. And also, as far as the premium and luxury car makers are concerned, they probably need to downsize their business. They need to right-size their local capacities, adjust the cost base. They will definitely become more niche-y over time. We think it's an illusion to defend the volumes. You have to right-size the business. You can still maintain a good level of profitability, but that's going to be limited to the niches, to the segments where they're really differentiated. These can be high-end cars with strong, powerful combustion engines, which are still a quite relevant market in China, and there might also at some point be a cyclical recovery on that front. But on, let's say, the entry-level premium segment, where you have lots of really, really competitive EVs from the local car makers, it seems a mission impossible to regain market share for the global premium car makers, or the Germans specifically.
Patrick, when I look at the year-to-date performance of European car companies and those who make the parts for them, Stellantis and Valeo stand out to the downside, both of them down more than 34% year-to-date. You have the likes of Ferrari to the upside, but taking that one out as a slightly special case, Renault and Michelin actually quite robust performance, only down 4.5%. I mean, does that seem to make sense in terms of how these stories have developed this year? Is that going to continue to be the direction of travel?
I think the moves we've seen year to date definitely make sense. You highlighted Ferrari is a totally different animal. Even within the luxury space, it's a standout company with the most resilient demand. And otherwise, if you look at the other names, yeah, the parts suppliers have been hit very heavily, and in particular over the last few months with the demand slowdown and the necessary production adjustments we have seen. Stellantis, you pointed out, very specifically overproduced in the US. They have to fight against high inventory, so they need to take down production, and that's hitting their margins this year very hard, in combination with high incentives for old model years that are sitting on the dealer lots that needs to be cleared by year end. So the tire space, you mentioned Michelin, they also had a profit warning on their specialty segment a couple of days ago, but still the defensive nature of the tires business, it's mostly a replacement business, explains why such a relatively safe haven has outperformed the rest of the space here to date.
Patrick, we are less than 2 weeks away from the American election, and one of the questions on the docket is simply how much more subsidization EVs may get in the United States. I'm curious about the European automakers more broadly. How much of their success, when the consumer does come back into full force, is dependent on that government support?
Well, EVs are just not profitable for the European OEMs at this point. And we have a little bit of uncertainty right now, or quite a bit of uncertainty, whether the EU will enforce pretty tight CO2 compliance rules. If they do so, we'll probably see an even lower profitability next year, because EVs are margin dilutive and some OEMs need to push their EV sales a lot to be compliant. Obviously, if the EU changes existing regulation and basically provides a bit of relief to the industry, that headwind would not be as pronounced. But right now in Europe, it's basically only Tesla that's able to make EVs in a profitable manner. All the others are struggling. There's a lot of homework to be done when it comes to the battery supply chain, because European batteries are just not cost competitive to the Chinese. And for as long as these issues are not structurally addressed, we think it's just going to be tough for car makers to really make money with EVs.
Very quickly, Patrick, talk to us a little bit about the China read-through as well. I believe we're getting headlines at the moment that there is a potential meeting on the dockets here. The Chinese top legislators will be meeting November 4th through 8th amid those stimulus hopes. How much of that Chinese stimulus could help the automakers, or could it hurt it?
Right. I mean, Chinese stimulus obviously would be supportive for the market overall in China, for demand overall. We think predominantly on the mass side of things, not so much on the premium side. But let's be honest, that's not a game changer for the structural shifts we're seeing in the market. We think for the global OEMs, this, if at all, would potentially slow the downward trend, but it would not lead to a reversal of the trend. We think stimulus in autos, in the end, is not designed for helping foreign car makers. It's for the economy as a whole, and that will lift all boats a little bit. But the trend for the international car makers in China is exactly the same.
Okay, Patrick, thanks so much for your time. Patrick Hummel, head of autos research at UBS. And we see stocks in Europe giving some cautious welcome to that red headline. We do see stocks having turned a little bit more, away from their extreme negativity of earlier, a little more back towards positive. But yes, it's nuanced, as we were just hearing from our guest there on the auto sector. Thinking about German car makers and where sentiment in Germany goes, we'll be bringing you the IFO data shortly. And we'll be speaking to the president of the IFO Institute, Clemens Feust, will be talking to the team about the latest survey. That takes us to the weekend, doesn't it? Let's put up what is happening across various parts of Europe, and I think this time we extend our attention even to Mexico City, because that's where the global business of the Grand Prix goes. I like that we bring something for everybody here. Arsenal versus Liverpool is for football fans and for those who just want to know whether there's going to be a lot of congestion in North London.
May I tell you what is the standout winner to me?
Yes.
The London Literature Festival. Why Keanu Reeves is talking.
Oh.
He's got a new book. I see. I've just won this whole.
You have.
I
think you have. Let's take a moment to just digest this information.
That. I don't know. It's a really exciting sporting weekend as well. The Belgrade Music Festival is one that wasn't quite on my radar, but it officially is now. We, of course, in addition to all the fun things happening around the world, Bloomberg has also recently launched the Weekend Edition, going deeper into the context of stories that shape markets and the world. Just you can scan the QR code on the screen to subscribe to the newsletter. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more. It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
The ECB's Pierre Wunsch says it is far too early to start considering a half-point rate cut in December. He tells Bloomberg we need more inflation data before deciding. Here in the UK, we are watching gilts closely as Chancellor Rachel Reeves says she will change the fiscal rules, potentially allowing her to borrow an extra £70 billion over the next 5 years. Plus, Mercedes running out of gas. The German car maker sees profitability fall well below target amid slumping Chinese demand. We bring you the details and the latest data.
Like, let's say somebody is an Uber or Lyft driver today, where they can actually sort of manage a fleet of cars and sort of manage, I don't know, 10, 20 cars, and just sort of take care of them like a shepherd tends their flock. You have your flock of cars, and you're the shepherd, and you take care of your flock of cars. I think that would be pretty cool. I think it's going to be a glorious future. It's going to be really something special. So, yes, good, all excellent questions. So, we do expect actually to start fully autonomous, unsupervised FSD in Texas and California next year. And that's with the Model 3 and Model Y. And then we expect to be in production with the Cybercab, which is really highly optimized for autonomous transport in probably, well, I tend to be a little optimistic with timeframes. But in 2026. So, yeah. Before 2027, let me put it that way. We'll make this vehicle in very high volume, but well before that, you will experience a robotic taxi via the Model 3 and Model Y program, and Model S and X too. But your 3 and Y will achieve unsupervised full self-driving with permission in wherever regulators essentially approve it in the U.S. and then to follow in outside the U.S. So, and it's Cybertruck too. Yes, of course. Sorry, I don't want to forget. Yes. All our cars, basically, all cars that we make.
makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in for Francine Lacqua here in London. And Mercedes shares are down this morning. One of the big corporate stories that we are focused on, that's after reporting, as I mentioned, disappointing third quarter earnings, profits squeezed. The automaker plans to step up cost reductions after fierce competition and weaker demand in China hit the luxury car makers' profits. Let's get the details and bring in Bloomberg's Oliver Crook, who has been detailing and going through the numbers for us. Join us out of Berlin. Ollie, break down the key metrics for us and where it leaves this car maker.
Yeah, listen, Tom, as you can see in the early session here, about 2.5% for Mercedes-Benz. And we knew this was going to be a tough quarter because we got that profit warning a couple of weeks ago from Mercedes-Benz where they said that basically their global sales would be down 3%, in large part due to China, where sales were down 13%, which is absolutely mammoth for them, their most important market. And of course, electric vehicle sales also down 31%. What we got today, Tom, was their margin. And this is absolutely key when we look at how profitable each of the car sells, particularly for Mercedes-Benz, because they've basically abandoned the volume game. They are just trying to sell high-margin cars, not the greatest numbers. So what we got was 4.7% margin. The estimates were for 8%, and last year it was at 12.4%. So, Tom, that is a major erosion for the Mercedes-Benz margins right now. And from what we saw from their outlook, it's not going to get any better in the fourth quarter.
Ollie, to what extent, the other side of the story, we look at Tesla, the blowout earnings report, the 22% increase in shares yesterday, adding $34 billion to Musk's wealth. To what extent is Tesla the canary in the coal mine when it comes to maybe green shoots for this auto sector, or is the story around Tesla idiosyncratic and not going to benefit these German automakers in the medium term?
Listen, Tom, when you look at the sort of outlook, I think that the Tesla story is much more idiosyncratic. And I've put together the comps about kind of what we've got from Tesla versus Mercedes-Benz. I mean, just look at this margin coming out from Tesla, 17%. That is absolutely huge, and it's much larger than what had been anticipated from analysts. Again, showing that to 4.7% for Mercedes-Benz. I also was looking at the volume of cars that they sold. I found this really interesting. Mercedes sold 500,000 cars last quarter. Tesla 460,000 cars. That is just about 50,000 cars difference. This is Mercedes, a car company that is 100 years old. So all of this putting into context, and again, the share move, $153 billion. That is how much was added to the Tesla market cap yesterday. That is more, Tom, than the combination of Stellantis, Volkswagen, BMW combined. So just telling you a little bit about how the investors are seeing this market in terms of their valuations.
That is quite the superlative, isn't it? Bloomberg's Oliver Crook breaking down the story around the auto market. Mercedes on the downside, Tesla on the upside is the simple take on that. Ollie, with the details, thank you very much indeed. So from Mercedes to the broader German economy then, and clearly the auto market and the stalling of that economic engine is a key challenge for that economy. Let's bring in the president of the IFO Institute, Clemens Fuest, on the latest details that come through. Clemens, we have an increase in terms of the business sentiment. Business sentiment is improving at the margins in Germany. Your take on what you're seeing and whether or not you think this is going to be sustainable?
Well, that's the big issue. It's an improvement after 4 declines. That's a good sign. It's coming strongly from expectations. So, for instance, in manufacturing, companies tell us the current situation has worsened, but they expect an improvement in the months to come. We get a positive reading from services, where companies, in particular in tourism, in IT, in logistics, are telling us things are improving. But of course, after 4 declines, this is a positive sign. But whether it's a turnaround, we don't know yet.
Clemens, so maybe we've bottomed out then. And if we look at the PMI data of yesterday for Germany, clearly there was a bit of a turnaround there to the upside. So whether or not we're starting to see very obvious green shoots, when you talk to those members or you talk to those participants in the survey and they tell you they see an improvement, are they giving you details on what is driving that improvement?
Well, we asked them about particular aspects of their situation, and manufacturing companies are telling us that they are still lacking orders and the order book is not improving. And in a way, this is in contrast to the improvement in expectations. At the same time, we have to see that the current situation is assessed as very bad, and the expectations indicator tells us something about starting from where we are, how is this continuing. So if the situation is very bad, it's kind of natural in this number that expectations at some point will improve. The question is, how sustainable is this? And I guess there, with all the uncertainty ahead, it's too early to say this is a turnaround.
And we had a reminder today, of course, and we were just talking about that with Olaf Crook, around the auto sector of Germany, Mercedes, and the miss in terms of the earnings there and the outlook as well being challenged. Do you expect that the car-making segment of that economy, the automakers of Germany, is that going to continue to be a headwind for this economy in 2025?
I'm afraid it is. Our reading today from the car sector is negative. So the positive readings are coming from other sectors, the chemical industry, for instance. But the car sector continues to have challenges, to face challenges. It is a fact that German companies are facing headwinds in this transition to electric mobility. There's a lot of uncertainty about this is playing out. Currently, the companies that have problems are those, maybe paradoxically, producing more electric cars or having moved more consequentially towards electric cars, because electric car sales in Europe are down. Of course, in China, there are particular issues. And the combination means, we do have strong headwinds for this industry, and I would expect this to continue. So economic growth, a recovery, will need to come from other sectors.
More broadly, is German manufacturing starting to see the impacts of Chinese stimulus?
German manufacturing will probably benefit from a Chinese stimulus, but structurally, there are strong headwinds for German manufacturing. We have the automotive sector. This is 16% of value added in German manufacturing, and we have headwinds there. We have higher energy prices, and we have the prospect of a more protectionist world, and that will have an impact. So this is really a challenging environment for German manufacturing. And for Germany as a whole, probably growth will have to come more from other sectors, including services.
There's a debate within the halls of the ECB now about whether they go 50 basis points or 25 in December. Clemens, your understanding, do you think Germany at least needs a bigger rate cut from this central bank?
I think for Germany, a bigger rate cut would be appropriate. For the Eurozone as a whole, which is the focus of the ECB, I think that's not quite the case. So Germany is a laggard in the recovery in the Eurozone. So for Germany, rate cuts would be appropriate. As I said, for the Eurozone as a whole, I'm not sure. We do have price pressures in services, and I think the ECB needs to watch that, because it would be bad if this inflation dynamic we're seeing currently, so declining inflation rate, if that turned around and the ECB was caught on the wrong foot. So for Germany, yes, more rate cuts would be appropriate. For the Eurozone, less so.
Okay, very interesting. Meanwhile, we have the Chancellor, Olaf Scholz, in India, and there's some moves being made in terms of what's happening in the Bundestag around trying to make it easier to attract skilled talent from India to help fill the gaps in the labour market there, or at least a tight labour market. What is the extent of the shortage of labour right now in Germany?
There is currently a significant shortage of labor in, I would say, parts of the economy. At the same time, the slowing economy lets some firms maybe not lay off people, but not replace their workforce. But in some sectors of the economy, especially the growing sectors like health, we do have a shortage. And looking ahead in the years ahead, due to our demographic structure with the baby boomers retiring, this will get worse. I think that's why it's very important to invest in relationships, in ways of bringing more people to Germany, not immediately, but in the years to come, when this labor shortage will become a lot worse.
Always fantastic context on these issues. IFO Institute President Clemens Fuest, thank you very much indeed. As the survey comes in, the outlook improves for Germany. The IFO Business Confidence Survey coming in, ticking slightly higher. But again, Clemens Fuest giving us the context, and the need for further rate cuts, certainly for the German economy, is the view there. Coming up, NatWest, the biggest gainer this morning on the FTSE 100 as the UK bank releases its quarterly results. We have the details. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Wednesday, Chancellor of the Exchequer Rachel Reeves delivers the UK's annual budget, the first for the Labour government after 14 years in opposition. How will the Treasury balance investing for growth while dealing with the deficit? And which tax increases will she use to meet the challenge? Live from Westminster, Bloomberg Television brings you special coverage, starting with the Chancellor's statement to Parliament at 12:30 p.m. UK time. Bloomberg. Context changes everything.
We haven't made a major acquisition because we don't need it. We are growing profitably. As of June, we were growing our top line at 10%. We have grown 60 million customers in the last 10 years. But very important, we're growing profitably. And we're rolling out our global platforms now in retail and consumer with our own tech stack. And so we're able to compete, with our current size.
At the end of the day, the cost is paid by the economy, by clients. I think, of course, shareholders are suffering, but eventually cost of borrowing and the facility and the easiness of accessing credit is impaired. So allowing capital to freely move across jurisdictions creates less cost for the economy.
UBS CEO Sergio Motti there, warning of a cost to the economy if bank mergers are blocked. And Santander's Anna Botin saying the company has no need to make a major acquisition at present. Let's get more on the European bank space and focus in on NatWest, the top performer right now across the FTSE 100, gaining after raising its outlook for the year and topping estimates in terms of the earnings in the third quarter. Bloomberg's William Shaw has been going through all the numbers for us. Will, how has NatWest performed today then?
Really well. They'll be really pleased. Paul Thwaite, the boss, hasn't been in place for a huge amount of time. I'm sure he'll be very happy with these results. The share price has reached a 9-year high this morning. They've raised their outlook for the year end. Return on tangible equity, they now expect 15%. That was 14% beforehand. They've also bumped up the revenue outlook to over 14 billion pounds for the year. Net interest margin, a key indicator of profitability, is also doing better than the previous quarter. So they will be very pleased. Their investors are pleased. I was on the media call a little while ago. They were talking about there being deposit growth and strong mortgage growth since Q1 this year. You know, the economic situation is looking a little better. You know, waiting for interest rates to come down. It seems like the outlook broadly is improving, and I think that's something that applies to UK banks more generally.
Yeah, well, on that note then, so really strong numbers coming through from NatWest, and clearly investors are rewarding the executive team for that, at least for the moment. How do those numbers at NatWest compare, to your point, with their peers in this sector?
So Barclays has been doing very well as well. They reported better than expected income from their two biggest businesses. That's kind of an indication that the CEO's cost-cutting plans aiming at boosting revenue are beginning to pay off. And again, like with NatWest, we saw their share price touch the highest in 9 years again earlier this week. Then Lloyds Bank also doing very well. They beat expectations earlier in the week. As it turned out that borrowers were coping better than expected with their payments. So it's kind of like a broad UK phenomenon, really.
Okay, Bloomberg's Will Shaw on these UK banks. A solid week in terms of the earnings front, and certainly investors getting on board with a gain of almost 5% for NatWest so far in the session. Will Shaw, thank you very much indeed for the context. Now, SpaceX's Dragon spacecraft has returned to Earth. You're looking at live pictures right now. After its 7-month mission, it splashed down off the Florida coast early on Friday morning and returned a crew of Russian and American astronauts. They were due to return 2 months ago, but their homecoming was delayed due to problems with Boeing's new Starliner astronaut capsule. It is the longest mission that Crew Dragon has performed. They haven't experienced gravity in 232 days, and that's why they are struggling to stand. As you can see, we were seeing pictures of them being taken out of the capsule that splashed down, a little over an hour ago. Coming up, renewed optimism for the Mag 7 after a lackluster quarter. I'm going to look ahead to what will be a huge big tech earnings week next week. The preview coming up. This is Bloomberg.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Does there come a point in time when the system breaks and the Fed can't fix it? Theoretically, yes. In our lifetimes, I don't know. So I think for now, it probably just pays not to think too much, just close your eyes and buy, probably Mag 7.
I think it's a key part of the portfolio, but what we're seeing, and I think it's slightly more exciting, is a broadening of the performance of the S&P rather than just a narrow concentration.
It's been actually a pretty broad bull market when you look at it from where it started to where we are now. There's a lot of, just about everything is up at least 20%. But I think we're looking at 6,300 next year, and by the end of the decade, I think a conservative target is actually 8,000. So I think we got a decade where we have a bull market.
Okay, there we go. 8,000 on the S&P. Not too much of a stretch. That's the view from Ed Yardino, at least. So, Mag 7 stocks, a number of them reporting next week. Really, really big week in terms of the earnings numbers coming through from the key technology names. On Tuesday, you're going to have AMD and Alphabet. AMD, to what extent are they catching up with NVIDIA in terms of those AI accelerators? NVIDIA has that 90% share or thereabouts of the market. To what extent is AMD making progress? We've seen evidence that they are starting to play catch-up. They've got a long way to go, but details on Tuesday will be really interesting on that front. Alphabet and Microsoft and Meta and Amazon, it's all going to be about what those hyperscalers are doing in terms of the spend on those GPUs, on those AI accelerators, on those data centers. Are they going to keep that spend going? And are they seeing more evidence of the return on investment from all that capex they're spending on the hardware that is powering this AI revolution? That's going to be key for all of those key companies. On Intel, on Thursday, by the way, really fascinating, of course. It faces its own challenges, Intel, so we'll see to what extent they are having any success at all in rewriting that business. Tesla, let's not forget, pre-market, you could see a bit of a drop there, but that's after a gain of almost 22% yesterday in the share price. That is the biggest jump in about 11 years, added about $34 billion to the wealth of Elon Musk. Talking of Elon Musk, he has reportedly been in regular contact with Russian President Vladimir Putin since late 2022. That is according to the Wall Street Journal. Former officials from the US, Europe and Russia said the pair discussed business, geopolitical tensions and personal topics. The report raises sensitivities given Musk's ties with the US military and intelligence agencies. Plenty more coming up. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. The ECB's Pierre Wunsch said it is far too early to start considering a half-point rate cut in December. He tells Bloomberg more inflation data is needed before deciding. Here in the UK, watching gilts closely as Chancellor Rachel Reeves says she will change the fiscal rules, potentially allowing her to borrow an extra £70 billion over the next 5 years. Plus, Mercedes running out of gas. The German car maker sees profitability fall well below target amid slumping Chinese demand. Now, ECB Governing Council member Jochen Nagel says the central bank should not hurry too much to lower borrowing costs, but remain flexible. The Bundesbank president told us all options are on the table for the December meeting.
We shouldn't be too hasty. We should be cautious, keep our track to really look what data is coming in. We have in December, when our next meeting is coming, we have our new projection. The new projection will include the year 2027. And then we have maybe more guidance, more orientation. But I'm not in favor to speculate too much what is necessary in our December meeting. This is definitely, I believe, not helpful.
Well, the hawks are certainly coming out to voice their views. We had the European Central Bank Governing Council member Gedimas Simkas as well of Lithuania saying there is nothing that justifies a half-point move in December, at least not now. Let's bring in Bloomberg's Valerie Teitel then for the wrap of all of this and how the market should be interpreting it. Val, we know that ECB members are debating. We've been hearing from the hawks pushing back on that 50 basis point expectation that some on the dovish side have been pushing for. How should the markets be calibrating all of this?
Yeah, look, we heard from Nagel there saying he doesn't want to speculate on a 50 basis point cut. But I have to say, Tom, the market is very much speculating that one of the next two moves from the ECB will be a jumbo cut of 50 basis points. I've got a chart here which just shows how the pricing has escalated. This red line here showing the pricing going past 50 basis points for the next two meetings. We're now pricing in just under 70 basis points worth of cuts if you combine December and January. Now, we have had some ECB members throw a bit of cold water on that speculation. We also heard from Pierre Wunsch on the side of the IMF yesterday.
Colleagues are already discussing cutting 50 basis points in December. We'll have two more readings of inflation before we have new projections. My take on it is, of course, the European economy is weaker than we thought, and we had an inflation surprise on the downside in September. But I think, honestly, talking about a 50 basis point cut in December is premature.
saying it's just a bit too premature and the market is jumping to conclusions a bit more quickly. But over the last month, we have seen this weakness in the euro as the market prices in more expectations of cuts from the ECB. Down nearly 3% on the month, Tom. Now, a lot of that has been driven by dollar strength in the back of the U.S. election and speculation about a Trump win. There has been a lot of action in the vol market when it comes to this FX pair. If you change on to my next graphic, I found this very surprising. We've seen a big jump in 2-week option implied volatility. Now that the next 2 weeks does encapsulate the potential result of the U.S. election, we've seen this big spike. It's one of the biggest of the currency pair. It's the 8th biggest, Tom, since the European sovereign debt crisis. So just to put that into a bit of perspective for you, we've also heard from the likes of Goldman saying they see a 10% decline in euro dollar if Trump does get into the office and he follows through with those harsh tariffs on Europe and China.
Okay, Bloomberg's Radio Total. Thank you very much indeed. We'll quickly check in on German bonds. You're seeing a little bit of a sell-off right now at the front end, so yields up 2 basis points. It seems that some of this could be down to that improvement in the IFO business sentiment gauge that came out at the top of the hour, but also those hawkish comments that Valerie was referencing there, particularly, of course, the Lithuanian ECB governor, Simkus, suggesting that he isn't ready, at least now, to push for a jumbo cut in December. He doesn't see the conditions there for that, and echoes a number of the hawks, of course, in terms of that pushback. So you're seeing a bit of selling pressure, yields up at the front end on the German 2-year at 2.10. Joining us for a wider markets deep dive is Freya Beamish, Chief Economist at TS Lombard. Freya, maybe we just start there with the ECB. Do you think they go 50, or the markets are kind of getting over their skis on that front?
I don't see why they're waiting at this stage in the game. I think there's a great proclivity to. I understand why, because there's a great proclivity in the ECB to kind of look in the rearview mirror and look at the wage data. And of course, that has taken longer to come down. But if you compare the European outturn with the US outturn, the US has allowed demand to help supply to repair. And that's where the productivity growth is starting to really break out above previous trends in the US. The same cannot be said in Europe, because the ECB has been so worried about structural deterioration that they've tried to crush demand back down to supply. And as a result, there's been no room for productivity growth to really pick up. So what that means is, yes, hopefully they'll get on and cut rates quite quickly. But actually, where there's perhaps markets getting a little bit over their skis is the economy should start to respond well in Europe once policymakers get out of the way. Because I think less of the structural deterioration is actually about just the energy shock, which is clearly a problem. And the kind of the changed relationship with China. Some of it, at least, is just because the ECB has had policy too tight.
Okay, so that getting out of the way, what does that look like, Freya? Is that kind of sub 3% on the main refinancing rate for ECB in the first half of next year? Where do you see rates longer term for ECB?
I see them moving rates down relatively rapidly, but then markets are probably a little bit ahead of themselves in terms of how much they're pricing in for terminal rates.
Okay, interesting. To the UK then, Freya, and I know you have views on this. So the news coming through, Rachel Reeves, she will be adjusting that fiscal rule. We're going to get the details, of course, next week with the budget. We did see a bit of a reaction in the gilt markets earlier this week, bit of a sell-off. Is that kind of a knee-jerk reaction, or does it suggest that she does risk provoking the bond vigilantes?
Yeah, I think all of this bond vigilante stuff is knee-jerk reaction. There's very little evidence over long time periods of there being sort of a one-for-one mapping between bond issuance and yields. They're just, if you plot those two things on a chart, you're going to get a horrible splodge that tells you absolutely nothing. I think where there's more evidence for a relationship between the fiscal side of things and yields and the broader nature of inflation is in the type of inflation that is hitting the economy and the degree of uncertainty. So when we look back to data going back to sort of the 60s and 70s, what we see is that there are different regimes for the bond market. And when there's high and volatile inflation that tends to be driven by negative supply shocks, that's when investors, when that's proved to be persistent, that's when investors really start to get in and price in higher term premia. So what the Chancellor's doing by releasing herself from the kind of the burdensome aspects of this fiscal rule that might be taken by the bond vigilantes as worrying, but actually it's just there to improve the supply side of the UK economy, which should bring down the risk of that type of supply side driven inflation. She wants to be able to give herself space to do investment in the UK economy, which is sorely needed. So that should actually be something that is better for term premium, not driving term premium up.
Freya, how much kind of weight would you put in a scenario that unfolds after the budget next week, where we have a bit more fiscal support for this economy, but a Bank of England that is progressing cautiously, at least more cautiously than maybe some of its peers, and maybe that's good news for the pound?
Yeah, I think a combination of kind of not entirely pro-cyclical fiscal policy, but sort of looser fiscal policy and tight monetary policy tends to be good for the currency. I think the Bank of England, again, I think there's a tendency to sort of look in the rearview mirror to worry that there's been a sort of supply side deterioration, and actually there isn't so much a need to sort of try to crush demand back down to supply, and actually supply would be recovering a lot more positively at this stage in the game if demand was allowed to provide that little bit of overheating, and that productivity growth would actually respond to that. So that's again a sort of an argument that the Bank of England perhaps should be cutting rates a little bit more rapidly and a little bit less kind of trepidatiously, but the terminal rate probably has risen in the UK as well.
Freya, on China, another area of expertise for you. You've written a note that talks about these 180-degree turns that we've seen from Chinese officials, whether it's on local government debt or on housing or some kind of support for the consumer. When do you think we will start to feel the benefits of that, if at all, particularly in the European economy? Yeah, great question. I mean, the way I kind of, the metaphor that I'm using is that they have been digging a hole, a very deflationary hole for both China and for the rest of the world and those economies that are particularly related, that are particularly exposed to China, such as Germany. They've been digging this massive kind of deflationary hole, and about a month ago they realized that probably wasn't such a great idea, that they're already facing a kind of a deleveraging drag on demand over a long period of time. So trying to support the economy purely by focusing on expanding supply was always going to just exacerbate that deflationary downtrend. So what we see in the mix of the reports that are coming out over the past kind of months or so, and the actual announcements, is that they do seem to be recognizing that kind of China 2.0, where you're just relying on external demand, is not going to work from the perspective of the rest of the world. China's too big, and the rest of the world is already wise to it, and it's probably not going to work from the perspective of China either, because it decreases returns, which is the key deficiency of income in the household sector in China. And it's now starting to impact on constraining wage growth as well. It looks like wage growth is at the kind of the COVID lows and kind of standard deviations below the pre-COVID rates. And that's a breach of the social contract in China. So there has to be a pivot there in China. We're starting to see that in a marginal sense. Okay, Freya Beamish, really smart analysis, as always, Chief Economist at TS Lombard. Thank you very much indeed for providing the context around some of these key market themes. Coming up, talking of the UK Chancellor, Rachel Reeves, she says she will change the government's fiscal rules, as we've been discussing there with Freya. We're going to bring you more details on that and how it positions the Chancellor ahead of a major week for her and this Labour government. Stay with us. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rate while covering. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome back. You are watching The Pulse. Happy Friday, everyone. We are showing you live pictures of German Chancellor Scholz alongside Indian Prime Minister Modi in New Delhi. They are meeting, as you can see. Also talking about, interestingly, one of the topics is whether or not Germany can get more skilled immigration from India to meet a shortage in labour. So we'll keep across that story for you, of course. A major meeting between two very significant players on the global stage. Now to the UK. We're going to be discussing in a moment England's wealth cap with Bloomberg's Tiffany Choi. But first, let's look ahead to that crucial UK budget next week. Going to be a major event for us and, of course, many of those invested in the UK. Chancellor Rachel Reeves says she will change the country's fiscal rules. She's going to go there. She's going to boost government investment. That is the idea. It's a move that could allow Britain to borrow as much as £70 billion more, at least over the next 5 years. Let's bring in Morwenna Ekwonian for the details on this from Bloomberg Markets Today. Morwenna, what should we understand in terms of this change in the fiscal rule? Are the markets going to accept it? How much scope is it going to give the Chancellor to invest and spend on capex?
Well, as you say, there is potential for another £70 billion of borrowing as a result of changing the fiscal rules. Essentially, what she's proposing is for measures which take into account the assets and investment that are on the government's balance sheet as well as the debt. So effectively cancelling some of it out and therefore allowing more borrowing. Now this, the scope and how the market will actually respond to it, we saw a glimmer of that yesterday. We did see bond yields rising and the gap between, say, the UK 10-year bond and the German one extending to its biggest since last year. And that does suggest that there's a little bit of nervousness there about borrowing more, could make borrowing a little bit more expensive. We all remember what happened with the mini budget a couple of years ago. Nothing quite so that extreme, but it could make borrowing a little bit more expensive. And of course, that would also limit the Bank of England's scope potentially to reduce interest rates. We saw a little bit of market pricing that in yesterday as well, which in turn makes those gilt yields go up a little bit higher. So it's not quite clear how, obviously, the market would respond to it in eventuality, but certainly there's a bit of uncertainty there. More borrowing obviously does make a difference.
Yeah, it's interesting. Freya Beamish just telling us from TS Lombard she doesn't think there's going to be anything more than a knee-jerk reaction in the gilt markets, and that longer term this shouldn't be too much of an issue. They can absorb this debt, but we'll see. As you say, it's going to be certainly a focal point, isn't it, how the gilt markets react to that budget. Talking of the budget, the Prime Minister Keir Starmer, I've had a number of emails into my inbox about this, heads in hands. A lot of anger, actually, I think. The way he characterised people who have stock holdings and shareholdings, describing them as not working people, because, of course, he's characterised those people. Then you're not going to raise taxes on hard-working people, but if you own shares and stocks, well, maybe you're in our sights. What is this all? This is about capital gains tax. Has he set himself up for a fall here? How's the investor community reacting to this?
It's certainly a very tricky line, and already our political reporter Alan Milligan has said his spokesperson has already tried to give a little bit of clarity on what he meant.
Walking it back, no?
Essentially, yes, and saying, really he meant the people who get most of their income from shares and assets rather than just people who have a little bit, because as a lot of the emails I've been getting today as well are pointing out, a lot of people have some shares, they have savings. He's talking about savings as well. And that's what people are encouraged to do. And you don't have to be an investment banker to have, you know, some assets of your own. And it's seen as being a bit of an old-fashioned definition of working people, this sort of, looking back to the sort of...
We thought Corbyn had been banished to the sidelines, but for some this will be Corbyn-esque in terms of the comment. But yes, they're rewording the phrasing, aren't they, around this?
Yeah, it definitely is seen as being something which perhaps wasn't intended to be as narrow in scope as it would suggest. And I think there's certainly going to be a little bit more clarity sourced, and I don't think this is going away anytime soon.
Okay, Moena, fantastic stuff. It's going to be very busy for you and the team next week, of course. Thank you for the context as we lead up to that budget then. Moena Koniam from the Markets Live team. You can get all the analysis, of course, on the website and on the terminal from Moena and the team. We're going to hear more from the UK Chancellor, of course, next week in that autumn budget special, airing live on Bloomberg TV, in EMEA and online on Wednesday, 12:30 p.m. London time. Now, talking of the UK and its prospects, the English town of Cambridge has been billed by some as the next Silicon Valley, due to its fast-growing tech and life sciences industry. Bloomberg's Tiffany Choi joins us more for what is happening in Cambridge and how Cambridge could be emblematic of the opportunities, but maybe also the challenges for a UK that's trying to become a tech superpower. Talk to us about what you found then, Tiffany.
Yeah, so obviously a lot of British politicians have started paying attention to Cambridge as kind of maybe an engine to revive the ailing growth that we're seeing here in the UK overall. But I think a lot of residents in Cambridge have been like, wait a second, maybe we shouldn't be so quick to kind of compare ourselves to Silicon Valley, not least because the two places are very, very different, but also because not so differently is that both of the places are very, very unequal, and in Cambridge it's only getting worse. You have a city with a hugely growing population, but the infrastructure and the average salary is just not growing to meet that growth. So in the last 10 years, housing prices went up by 78%, and average pay by 23%. And on many other metrics, Cambridge just has some of the worst inequality in the UK. Educational attainment inequality is some of the worst in the UK. The gap between the highest earners and lowest earners, some of the highest in the UK. And so, you're really seeing a city that's kind of faced with these core problems of, homelessness, water scarcity, a lack of transport.
Water scarcity as well. So what is the government doing to address some of these issues?
So there's been a bit of a lull period recently because of the change of government over the summer, but there are signs that, especially with Labour's commitment to revive growth and get Britain building, that they are going to be committed to the cause. The Minister for Housing and Planning recently wrote a letter saying he was going to meet with local leaders and hold meetings and pledge his commitment. But, it's going to be a long road ahead. It's going to take a lot of money and a lot of time. And in our budget-constrained times, it's yet to be clear where we're going to see that money. But, it's in everyone's interests. It's not just about inclusive growth. It's also about, making sure that the ambitions themselves can be fulfilled, because if you don't have the office space or the lab space or the ways for people to commute to those spaces and homes for these people, then, Cambridge just isn't really going to be a hub of any kind.
Okay, Tiffany Choi, really great reporting. Thank you very much indeed. If Cambridge can't do it, how can the rest of the UK? I guess it's a litmus test, really, for the ambitions of this country. Coming up, we're going to hear what Geeta Gopinath, IMF First Director, Deputy Manager, has to say on the global economy. And more on that bumper gain in Tesla shares, up 22% in a single session yesterday. Stay with us. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl,
I
right?
can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The U.S. economy is one of the strongest among the major economies, if you look at those. And when we compare the U.S. to the other G20 economies, it's the only economy whose GDP is higher now than we had projected before the pandemic. The only major economy. So it's a very strong economy, a lot of confidence in it.
IMF First Deputy Managing Director Geeta Gopinath. She didn't say there, but we're talking about US exceptionalism, of course. And talking of US exceptionalism, I'll get it out, it's a Friday. You look at the woes of the German automakers and then you compare that with Tesla. Smashed it on the third quarter earnings. The stock rallied 22% in a single session yesterday. That's the biggest pop that we've seen in more than 11 years, adding $153 billion US in a single day to the market cap of that company. You can add up 3 or 4 German automakers to the mix to try and make up a market cap of that size. Also adding, by the way, about $34 billion to the wealth of Elon Musk. Let's see how that trades today, if there'll be any profit taking. Pre-market down 2.3%, but after the rally of yesterday, not really much of a move in the context. Now, in terms of what could propel US equities in the quarters ahead, look at this. The money markets adding $500 billion stateside. Just this year alone, it has hit a record $6.5 trillion US of money or cash invested in money markets. The yield is still there. Even as you get that Fed cut, you'll certainly get more of a yield than you would if you parked it in a deposit in a US bank. But is that dry powder that can be used to put to work in the US stock markets, as Ed Yardini points to 8,000 for the S&P? Just worth bearing in mind. Bloomberg recently launched, by the way, the weekend edition, going deeper into the context of some of these stories that shape markets and the world. You can scan the QR code on the screen to subscribe to the newsletter. Do that now. It contains essays, reviews, and other stories that take an expansive view of finance, the economy, life, and culture. Everything, essentially. Up next, Bloomberg's Brief with Danny Berger. Manus Cranny standing by. The Dream Team in New York. Stay with us. US futures, just marking for you, currently up on the S&P by 0.1%. NASDAQ futures pointing higher by just shy of 0.2%. Danny Berger, Manus Cranny will set you up for your Friday trading day stateside. This is Bloomberg.
minutes ago, we asked the live audience on X to submit a few requests for what they would like us to try out here. So I will take a couple of prompts. Okay. Bot Gaskar wants to know if GPT-4o is capable of real-time translation. Mark, you want to try this one?
Sure. Yeah, let's do it.
All right.
Yeah.
I speak Italian, so we can just do English Italian.
Let's try to do English Italian. Sure, let's do it. Hey, ChatGPT, how are you?
I'm doing fantastic. Thanks for asking. How about you? How's your day going?
I'm doing great. So I would like you to function as a translator. I have a friend here who only speaks Italian, and I only speak English. And every time you hear English, I want you to translate it to Italian. And if you hear Italian, I want you to translate it back to English. Is that good?
Perfetto.
Mark, io mi chiedo se le balene potessero parlare, cosa ci direbbero?
Mike, she wonders if whales could talk, what would they tell us?
They might ask, how do we solve linear equations?
Potrebbero chiederci come risolviamo le equazioni lineari.
Sicuramente sì.
Certainly yes.
Great. Looks like it works.
All right. So the next one is from Burrito John 78, who asks, can you tell what you're feeling just by looking at your face? Barrett, you want to give this one a try?
Absolutely. Let's try it out. Hey, ChatGPT.
Hey there. What's up? How can I brighten your day today?
Okay, yeah, so I'm going to show you a selfie of what I look like, and then I'd like you to try to see what emotions I'm feeling based on how I'm looking.
Sounds like a fun challenge. Go ahead and show me that selfie, and I'll put my emotional detective hat on.
Okay, so here's me. So what kind of emotions do you think I'm feeling?
It seems like I'm looking at a picture of a wooden surface.
Oh, you know what? That was the thing I sent you before. Don't worry, I'm not actually a table. Okay, so take another look.
That makes more sense. There we go. It looks like you're feeling pretty happy and cheerful, with a big smile and maybe even a touch of excitement. Whatever's going on, it seems like you're in a great mood. Care to share the source of those good vibes?
Yeah, no, the reason I'm in a really good mood is because we were doing a presentation showcasing how useful and amazing you are.
Oh, stop it. You're making me blush.
Amazing. Well, that's it for today on live demos. As you can see, this just feels so magical, and that's wonderful. But we also want to remove some of the mysticism from the technology and bring it to you so you can try it for yourself. So over the next few weeks, we'll be rolling out these capabilities to everyone. Today has been very much focused on the free users and the new modalities and new products, but we also care a lot about the next frontier. So soon we'll be updating you on our progress towards the next big thing. And before we wrap up, I just want to thank the incredible OpenAI team, and also thanks to Jensen and the NVIDIA team for bringing us the most advanced GPUs to make this demo possible today. And thank you all very, very much for being a part of this today.
The heavy hitters come next week. Services are the highest since 2022. New home sales rising. Keep an eye on Capri, down 45%. Lena Khan has had her way with the FTC and decried the bag combo. Roll it over, have a look at the bond markets. In the space of this week, we're up another 10 basis points on the 10s, but there is a sense of exhaustion. Yields just dropped by 1 basis point this morning. The question is, are the bears, sort of that bear attack, is that running into a little bit more of an exhaustion point?
Well, it's certainly a tough prospect for the next couple of weeks. It's earnings ahead, you have jobs next Friday, you have an election, you have a Fed decision. So what do you do in the meantime? Bank of America writing this morning that people are just sticking to their guns. They're sticking to gold and AI. They want to go with what they know and what they have conviction about because the rest is so uncertain.
And those who are very uncertain are going into money market funds. Money market assets rise rise to a fresh record of $6.5 trillion. It's the institutional money that drives it in the first instance. I think at this stage, people are sort of hedging and almost over-hedging. Geomacro Market Pepich says you want to be short duration into this election. That is his main hedge for now.
And if all else fails, wears pink. Did you do this on purpose?
She
did you
sent
see
me a
what I was
memo.
going to wear?
I assure you, I did not get the roster. She sent a memo.
Sure, man.
We're matching, but let's see what Mark Haefele's got to say in terms of not what we're wearing, but what we're saying. He is, of course, over at UBS, and he writes this: reducing your equity exposure in the wake of a disappointing election outcome is likely to be counterproductive over the long term. We would caution against knee-jerk or simplistic assumptions of equity market outcomes based on individual policies. Please say Mark is with us now. He is the CIO of UBS Global Wealth Management. Mark, good morning to you. Hold your nerve, remain invested into the headwinds of politics. Good morning. Is that the message?
It is the message. Vote at the ballot box, not with your portfolio. There's so much emotion in this election, but when you look at the data, it's very rare that a presidential election is really going to have a longer-term impact on your portfolio.
So, Mark, just the here and the now, and setting aside the election, as you say, not going to have an impact. You've upgraded U.S. and global equities. They've already been on a tear. We're nearing 50 records year to date. Why the upgrade?
Well, one of the big things is the revisions that have happened in U.S. data. So take the emotion out, look at the data. You're seeing that actually GDP in the United States has been stronger, the savings rate has been stronger, and that real incomes are positive. So we've upgraded the chance that there is no landing in the United States, and with that, we're more optimistic about U.S. equities and global equities. And then what's happened in China has taken out some of the tail risk. So that's another reason that we're more positive on equities from a probabilistic outcome standpoint.
Well, we'll get to the China point in a moment, but let's expand on your no landing thesis. There's been quite a spike in the bond markets. People are saying, Bloomberg have run the numbers. They said 20, 30 basis points of that move is down to monetary policy. The other part of it is down to the no landing thesis. With that no landing, Mark, does the Fed pause and do yields trade higher?
Well, we don't think that the Fed is going to pause. We still see another 50 basis points this year. But of course, if they did pause and said it was because they think the economy is not going to land, I don't think that would be taken so badly by the stock market.
Mark, when it comes to the bond market, though, we are in this period where you have a Fed that cut some 50 basis points, and 10-year yields since then have moved nearly 50 basis points higher. We've talked breathlessly about reinvestment risk, that you need to get into the bond market, that yields are coming down. What does it do to investor psychology and really your clients when you tell them about reinvestment risk, yet they've just lived through a period where that didn't play out?
Well, where we've focused our attention is saying, look, given that the Fed has started this cycle and that many central banks have started this cycle, you do have to look at your cash holdings. How's that been working out for you, especially when we see the prospects of no landing? And if rates continue to fall, where are people going to be redeploying that cash? And certainly some of it you want to get in front of it. So you don't have to do it out at the 10-year duration. You can do it in more near-term duration. But that's certainly something that people should be considering. And again, some of that move may be because of better prospects for the economy, but we've seen a Trump trade in equities, and perhaps some of that is a bit of a Trump trade in the bond market at in the 10-year, because people are unsure about how much stimulus might come into the economy.
So if those two reflect quasi-Trump trades, what is gold telling you? Mohamed El-Erian's op-ed in the FT I thought was interesting this week. He talks about the rise in alternatives to the dollar, and he questions the whole system. You see gold as attractive, but why?
Yeah, several reasons. Invasion of Ukraine. For some of our clients, that was something of a weaponization of the dollar system. So that's number one. We do see central banks increasing gold holdings. The cost of holding gold, the opportunity cost, comes down, as interest rates fall, and it remains this hedge for these uncertain outcomes that people are concerned around the election.
Mark, when it comes to election night, hopefully you'll be asleep because it'll be quite late for you as results are rolling in. What are you telling your clients to do on that specific day? Is it a put the numbers away, don't look at it, come back to it in the next few weeks?
Well, I think that getting some sleep on election night makes some sense because we're unlikely to know the results as quickly as we normally do. Not saying it's going to take weeks, but it might take a while to count some of these votes. Obviously, what happens with the Senate and the House is also important. But I think what we always try to do is pick our spots, have our scenarios lined up, and then if there is really an outside move, then we would try to take advantage of that because you don't know what's happening. But generally, just reacting to the headline, that's a mistake.
Well, certainly in 2016, it was in the very initial, if you remember 2016, it was very initial, stocks negative, and then 24 hours later, it was very different. One scenario that we haven't really touched a great deal on is a blue wave, which some people say is tears for the stock market. But I just want to talk about disruption. The risk is disruption or a contested election, and that, Mark, can present some massive opportunities. Is that sort of a scenario that's on your radar?
Well, I think it has to be. I certainly remember back to Bush Gore and the way that made people feel. But that's just a short-term disruption. The idea of a longer-term disruption, I obviously that would make the market sell off. I think that's a low probability event. But you want to be ready for things.
Well, here's to hoping in a little over a week's time we can all get some sleep. Mark, thank you so much. Mark Hafley of UBS Global Wealth Management. Enjoy the rest of your Friday and your weekend. Let's get to some of the other top stories now trending on the terminal this morning. A federal judge has blocked the planned $8.5 billion acquisition by Tapestry of rival Capri. It's a major victory for the FTC, which had said it would harm competition in the market for accessible luxury handbags. It does come somewhat of a surprise. Many observers of the hearing had predicted the FTC was more likely to lose the case.
Mercedes plans to step up cost reductions after weak China demand and fierce competition hit its profits. The results are a blow to the core of the car maker's strategy to help fund its transition to all-electric future. It didn't elaborate on where the cuts would fall.
Yum Brands and Burger King have removed onions from some of their locations. The restaurant industry continues to investigate that E. coli outbreak, which was first traced to McDonald's earlier this week. Yum withdrew fresh onions from some Taco Bell, Pizza Hut, and KFC locations, quote, out of caution. They did not disclose, though, which stores and regions were affected, or did they name suppliers.
Coming up on the show, Elon Musk has been holding talks with Russian President Vladimir Putin. That's according to the Wall Street Journal. More on the story next.
And we're going to get more into election risk. We're going to be catching up with Philip Taves, of CEO of Taves Asset Management. All that to come on your Bloomberg Brief this morning.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
this real momentum from Wall Street? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Deliberately dismantled our border and threw open the gates. She threw them open. The gates to an invasion of criminal migrants from prisons and jails, from insane asylums and mental institutions. We're a dumping ground. We're like a garbage can for the world.
Someone who suggests we should terminate the Constitution of the United States of America should never again stand behind the seal of the President of the United States of America.
The race for the White House is now down to 11 days. Both Donald Trump and Kamala Harris are cautioning voters against their opponent. One of former President Trump's biggest supporters, of course, is Tesla CEO Elon Musk. The Wall Street Journal reporting that Musk has been in regular contact with Russian President Vladimir Putin since late 2022. Joining us now is Bloomberg's chief political correspondent, Anne-Marie Hordern. So, Anne-Marie, we have the world's richest man, one of the biggest political donors and government contractors in contact with Putin. Just how do we make sense of it?
Well, this is going to raise the concerns the national security community will have about really Elon Musk's outsized presence in this space, and also the access he has because he has these government contracts, because he's dealing with the Pentagon and NASA. He does have a certain level of security clearance, and now the Wall Street Journal is talking about the fact that they've shared a few phone calls. Elon Musk said in 2022 that he has spoken to Putin. The Kremlin came out and said there was only one conversation. The Wall Street Journal says there's been more. There's been more with other officials around President Vladimir Putin, like Sergei Kirilenko, his first deputy chief of staff. And I think one part of the story that's going to get a ton of attention is that the Wall Street Journal says that Putin asked Elon Musk to not activate his Starlink over Taiwan to help out his friend Xi Jinping of China. And I think that's going to get a lot of concern around the national security apparatus in Washington, D.C. But also, Danny, to your point, the fact that this individual also has been playing an outsized role when it comes to the campaign right now in terms of his support for former President Donald Trump, physically on the trail, and also just the tremendous amount of money he's throwing behind him.
Just when you mentioned the money, I mean, he's all in now at $156 million. He's just made another slug of money. Maybe the bigger question, and this is something, well, let's see how the Harris campaign capitalize on this, which is the outsized influence of Elon Musk financially and in terms of relationship and a role in government, certainly with two of the main adversaries of the United States of America, which is Russia, and of course on a trade level with China.
And this money is not just to help Donald Trump get back into the White House. He's also donating to Republican House races and Republican Senate races. Also, he talked about this on his earnings call when it came to Tesla, the fact that if he would have this DOGE part of government, the Department of Government Efficiency, he would like to run it, and almost alluded to the fact that one of the first things he would like to do is have a pathway for autonomous driving. So he's really firing on all cylinders in terms of potentially his impact. It's hard to think of someone else who's doing the same in terms of the national security clearance level. I would say Mark Cuban on the Democratic side is a billionaire who's really out there campaigning for Kamala Harris. But Elon Musk seems to have an advantage that no one else seems to have within either of these parties.
Right, and his billions are a lot more, to be fair, too. Trump this weekend, he's going to be at MSG. He's also going on the Joe Rogan podcast. These are the type of events that in previous election cycles, we would say there's no way a Republican's going to be in New York City. There's no way someone would go on this type of podcast. Just what does it tell us about where we are in the race?
No way a Republican is going to win New York, and no way a Democrat is going to win Texas. But you see both Kamala Harris going to Texas, and you see Donald Trump going to Madison Square Garden. Evan Roth-Smith, a pollster, joined us this week, and he said, this is about the shock and awe effect in headlines. The fact that we are sitting here right now and saying, why is Trump going to the Garden? Why is Kamala Harris going to Houston, Texas? Why, just, a little over a week out from the election, are they using their time in states they cannot win? It is that shock and awe effect, and it is the fact that maybe this is how they can win a news cycle.
I just wondered where you get more bang for your buck, whether it being with Springsteen or Samuel Jackson, or whether it's being aligned with Elon Musk, the entrepreneur, back on the economy, doing things. I mean, it swings every which way. Avoid Madison Square Gardens on the traffic this weekend. I think we can all take that for the weekend. Anne-Marie, thank you very much. Anne-Marie Hoare down there tracking the latest political stories. Let's turn our attention a little bit more closely to China. Beijing's economic stimulus failed to impress global leaders in Washington. This is as they wrap up their annual IMF World Bank meeting. They're calling for a clearer plan to boost the economy. Jill DeCease is with us. Jill, good to have you with us. I mean, this is about being underwhelmed and the serious risk, according to Yellen and others, that China could really not make their growth targets. So this is a huge concern for them this week in Washington, I should say.
Yes, Manus, and I think it goes a little bit beyond that. So, what we've seen from China over the past month and a half or so is a tremendous amount of stimulus, particularly on the monetary policy side. That's really actually what got markets so excited all those weeks ago when we first started to see this rolling out of, promises for additional rate cuts, cuts to reserve ratios, all that kind of stuff, this monetary policy easing to kind of help things along. That seems like it might be able to get China somewhat close to its growth target of around 5% for the year, but what we've really seen in terms of disappointment since then is any follow-through on the fiscal policy side. And so that's also what we're seeing echoed among a lot of finance ministers and central bankers in Washington. You just referenced U.S. Treasury Secretary Janet Yellen talking about how a lot of what she's seen out of the stimulus package from China so far doesn't really do a whole lot to address some of her major concerns about the economy, whether that be overcapacity concerns that the U.S. has certainly levied against China for at least the past year now, or whether that be issues about domestic demand within China and whether that's actually set to improve. We're really not seeing that, and that's kind of what we have seen echoed among a lot of these central bankers and, again, other finance ministers in Washington, D.C. this week.
So then it's a market, Jill, that just keeps waiting for any more announcements, any more sort of bazooka that could come. Are there more opportunities on the schedule for Chinese lawmakers to do that?
Yes, well, Danny, just within the last hour or so, we actually got an announcement from Beijing that the Standing Committee of the National People's Congress, that's really the top legislative body within China, is hosting its next big meeting. It's going to be November 4th through 8th, so right in the middle of that U.S. election cycle there. But that's really the next opportunity that China has to discuss and then ultimately announce further policies that could actually help the economy. Now, it may be the case here, Danny, that Beijing, Xi Jinping are really kind of waiting on the outcome of the U.S. election to actually make decisions there, because you have to think that if you're China, if you're Beijing, you want to know whether or not it's going to be Kamala Harris, maybe sort of status quo when it comes to China, or whether it's going to be Donald Trump, who has promised, levies of up to, 60% or so on Chinese EVs, other types of technology there. I mean, who's in the White House could potentially make a pretty big difference in terms of how you might want to calculate a lot of your economic policy. But yes, I think within the next couple of weeks, it does seem like we'll have another opportunity for Chinese leaders to sit down and actually discuss whether or not they want to roll out more stimulus here.
It is remarkable how much of this world is just waiting for what happens in 11 days, and probably will take some time after that to know what actually happened. Jill, thank you so much. Bloomberg's Jill DeCease there. Coming up, 43 years in the making. Yankees and Dodgers going head-to-head in the World Series. But if you want to root for the home team, sorry, it's not going to be cheap. We'll discuss up next.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Brief on a Friday with me, Manus Rennie, and Danny Berger in New York. We got the front pages. This is what we've got. We're going to kick it off with the top headline from around the world. New York Times, it leads with the LA District Attorney will ask the court to resentence Eric and Lyle Menendez. Now, the brothers were convicted of first-degree murder for the killing of their parents in 1989 and were sentenced to life without parole. The case has regained attention following the Netflix show and a documentary.
Next up, the Washington Post has this on the front page. Elon Musk's Starlink satellite business is set to boom if Trump wins. Trump has pledged to unleash funds for national security installations in orbit and slash red tape for Musk. Starlink is vying for billions of dollars of national security contracts against rivals like Amazon in the coming years.
Of course, we just discussed the Journal article, which is about those conversations purportedly between Putin and Elon Musk. Bloomberg goes with the World Series, the Yankees and the Dodgers, and the ticket prices are soaring. The cheapest seats for Game 1 are in Los Angeles, set $975. Game 3, it goes bid. Yankee Stadium averaging $2,000, the most expensive in history. The question is, would she pay $2,000 to go and watch this game?
Okay, what I will say, the most expensive one is reselling $20,000 out of dugout, but that is Legend Suite seats. I have never been to a better baseball watching experience. You get like this whole buffet. It's not worth $20,000, but I kind of get it. For Game 3, of course, yeah.
Just to give everybody a bit of a clue, she has officially explained to me the process of a baseball game. And
I've drawn him a diamond.
She's drawn me a diamond so that I'm.
Here's your fun fact. This is actually technically a New York Derby. The Dodgers used to be a Brooklyn team before they moved to LA. So for everyone complaining that we didn't get the Mets because we didn't have a New York kind of battle, this is kind of it. So there you go.
Roll up and get your tickets. She's marketing them.
also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger with Manus Cranny. Let's set your agenda.
A calm before the storm. Markets are steady ahead of a big week of earnings and data. The Mag 7 hits a 3-month high. Behind closed doors, Elon Musk is said to have regular contact with Russian President Vladimir Putin since 2022. That's according to the Journal. And fashion merger blocked. A U.S. judge sides with the FTC to halt the Tapestry's $8.5 billion bid for Capri. Handbag wars, Danny, handbag wars.
Coach, Versace, Michael Kors, no stability for them, but stability for risk assets yesterday and this morning, up about 1/3% for most markets. Russell 2000 outperforms. Perhaps all thanks to Tesla yesterday. Just to put in context, $154 billion in market cap added. That's more than the value of Ford, GM, and Stellantis combined. It's a pivotal few weeks. In the meantime, treasuries are rallying with European debt yesterday and this morning. We're down by about a basis point across the curve. 10-year yields back below 4.2%. But Manus, it is a pivotal next few weeks. Earnings, jobs, elections, 11 days away.
It is indeed. And you talk about the size and the rally in Tesla. Just think of the size of NVIDIA. It's the size of, what, 5 G7 countries. And that's going to define, it's not next week, but it is in a couple of weeks. I think Mark Haefele made a really clear point, which is don't knee-jerk reaction to the U.S. election results. Don't falter. Stay invested. And indeed, they've upgraded their view on not just U.S. equities, but global equities as well, going into the eye of the storm.
Well, again, I go back to Bank of America this morning with Michael Hartnett saying what people are doing around this election is they're not necessarily stepping back. They're just going further into their convictions. Convictions this time around being gold and AI.
Yeah, and there's been a lot written about gold and record highs between Mohamed El-Arian and indeed UBS Wealth Management like gold as well. Whether it's an inflation hedge or an election hedge, you take your choice.
So Mark Haefele says, don't overreact, don't get emotional, but we are 11 days away from the election. Joining us now is Felipe Taves, CEO of Taves Asset Management. Felipe, you have very strong opinions as to what will happen if we get a Trump presidency and more tariffs. People have written about slowing growth. You take it a step further and say a depression is likely. Talk us through your thinking.
Well, no, so I didn't say depression is likely, actually.
Possible,
but I
let's
said
say
that. So our job as asset managers is we have almost all we do is we address risks, either through hedging or strategies for addressing contingencies. And I think the thing that you need to look at, normally we don't know when things are going to happen or what's going to happen. And so we're blessed with a date, right? So we have November 5th, and we know we have a date, but we don't know exactly how that's going to play out. The thing that I think is completely underappreciated by the markets right now is proposed tariffs, right? So normally with elections, you're right. There's all this anxiety coming into a presidential election, and then it becomes a non-event. However, in this instance, if either candidate wins, they're going to have a hard time enacting policies because of the legislature, except tariffs. And so I just wrote a book. It's coming out in March, and it has a chapter on the Great Depression. And in the Great Depression, in 29 you had the crash, right? So the last 4 months of 29 were terrible. But then in 1930, there was the brilliant idea of the Smoot-Hawley tariffs. And those were put in place to protect American farmers. It was a terrible idea. There were 25 countries that retaliated. Larry Summers has said it made the Depression great. So I've created an acronym, MAGA, Make American Depressions Great Again. People are completely underappreciating the potential impact of the tariffs. And there were two things that'll happen. First, the first thing that'll happen is that everyone may reset their thinking around interest rates. And so we've all got this baked in assumption that the Fed is going to continue to lower rates going over the next 18 months, even before a president comes into office if Trump is elected.
So Felipe, there's a lot to digest there in terms of the scale and the potential scale for tariffs. Tariffs at the moment are about 2.5% of GDP. The risk is if Trump comes to power, it could be anywhere between 10 to 20% on some countries, 60% on China. How do you prepare for that risk? You've already taken remedial action, but quantify what you do in the face of that worst tail risk for you, which is tariffs.
Well, a lot of companies are going to be in trouble because they've already taken orders for next Christmas. So they're just going to have to eat the increase in costs and affect their profitability. But as investors, what you need to do is address the contingency, right? The contingency that things could go very badly. So in bonds, what that means is prepare to be adaptive. We've already seen rates move up and bonds move lower. Prepare to reposition from investment grade or high yield into T-bills. For equities, adopt a hedging strategy or go into hedged equity funds or ETFs for at least half of your equities portfolio coming into the election, because you just don't know how it's going to go. Right. It could be another non-event, right? So you want to prepare for an optimistic scenario, but you also want to address the contingency that things move down significantly. And we think that there's a possibility of that post-election, if we ever find out who wins.
Felipe, there's also been a lot of digital ink spilled on risks to dollar, with Trump favoring a weaker dollar, but policies that are pro-dollar. Edward Fishman, a former U.S. sanction official, wrote in Politico an op-ed this morning saying that the risk isn't in using sanctions too much, it's in wielding them rashly and alone. And this lesson reveals that the next U.S. president's sanction policy could have serious ramifications for the dollar's global role, especially if the next president is Donald Trump. I wonder what you think about that, the challenge to the hegemony of the U.S. dollar, or even the direction of it. Should there be not just tariffs, but use of sanctions alone by the U.S.?
So I'm a little skeptical of that because, for many years, for decades, we've heard about the possibility of the end of the dominance of the dollar. So I think that one is a very big question mark. I mean, but what it shows is that everything is in play. And so what markets don't like is uncertainty around the dollar, around markets, around the Fed trajectory. And really, what are stocks? Stocks are really just, they're valued based on optimism. So all you need to do is go from optimistic to pessimistic in terms of what's playing out in the economy, what's playing out with earnings, and that could change everything.
Look, to a certain extent, the dollar, bonds, and to a certain extent, equities have some flex of a Trump win, maybe even a red wave. It depends on whether you want to look at the polls or whether you want to look at the betting markets. On the night of the election, we've just heard from UBS saying, don't do a knee flex, don't do a flex reaction, don't do a knee-jerk reaction. On the night of the election and the 24 hours after, what's the most important asset classes that you're going to be looking for as a signal and a signpost for 2025?
For me, it would clearly be bonds. So coming right into it, and as I say, we may already be seeing effects on the bond market of a potential Trump win. But I think that if the market readjusts and says, wow, the Fed may not be able to lower, we may be in a situation where we actually see potential inflation moving forward, and we see rates move higher than they are now, maybe even significantly higher. That would be the game changer, because then that would affect everything, including the economy and stocks, and we'd all have to reset our thinking around our portfolios.
Okay, Felipe, thank you very much. Felipe Tavares of Tavares Asset Management. Your views, we're counting down to that election. And we're going to stay on the election watch and focus on the race for the White House. But down ballot races could prove decisive in how much power the next president really has. Joining us now with this is Billy House, Bloomberg's congressional reporter in Washington. Billy, look, the House is up for grabs, and it seems as if the fight is playing out in some pretty competitive races, both on the East Coast and on the West Coast. Republicans are now in control, but how many seats are really up for grabs for the Democrats, and how is it playing out at the moment?
Well, both chambers, the Senate and the House, are really up for grabs. Right now, Democrats control the Senate and Republicans control the House. The House is a war map of some 37 competitive seats, and Democrats just need to have a net gain of 4 seats to take over that chamber, and that could lead to the first black speaker in American history, Hakeem Jeffries. But you're right, cluster of seats in New York, most of them surrounding New York City, and out in California, in the LA area, in the Valley, those could alone determine which party will control the House. The Senate fight right now is tilting towards the GOP, and there's just a handful of seats there in a chamber that's now held by Democrats, 51-49. That could determine that. Everything's up in the air in this final week and a half or so, and of course this all matters because the House and Senate have a great say on whatever presidential tax plans, Wall Street regulation, or border policies, or even naming judges will be impacted.
Billy, to that point, there's been a lot of questions, eyebrows raised, why Trump went to Coachella in California, why he's going to Madison Square Garden in New York City this weekend, and why Harris is in Texas. How much of that can we look at these places and say these are key for down ballot, and that's what these candidates are there for?
Well, I'll take New York first. There are those 4 suburban New York City races that Republicans hold those seats, but Biden won in those districts. So Democrats in New York, a heavily leaning Democratic state, believe those seats belong to them. And those 4 seats alone give you a net gain of 4 seats to take over. So that's why Trump and Republicans are in New York playing defense for those 4 lawmakers and others. Out in California, it would seem that Harris's base is there, and she's out there along with much of the apparatus for the Democratic Party trying to pick up Republican seats there. So both of those are kind of dictating these stretch run strategies.
Let's just talk a little bit more about the Senate. Currently controlled by the Democrats. If you just look at that, they've got 51 seats. They've got a number of independents that caucus with them. But the races that we're going to focus in on are Montana, Ohio, Nebraska, and Texas because of retirements. What is the most competitive battleground?
Well, right now, Democrats' hopes really hinge on retaining Montana, where Democratic John Tester is in a real battle with Tim Sheehan, and some polls show him behind. And again, the Senate is now held by Democrats, 51-49, but really 2 of their seats are independents who happen to caucus with them. They can't lose Montana, and if they do, they have to depend on a real long shot upset for instance, a Republican in Nebraska by an independent. And then there's Ohio, you mentioned, where Sherrod Brown is fending off not only a tough challenge by Bernie Moreno, but that's obviously the home state of the vice presidential nominee on the Republican side.
Okay. Billy, thank you very much. That is Bloomberg congressional reporter Billy House. Coming up, a brutal morning for fashion house Capri after a judge blocked its merger with Tapestry. We're going to have more on that next for you on your Bloomberg Brief.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manus Cranny here in New York. Shares of Capri are plunging in the pre-market. A federal judge has sided with the FTC to block Tapestry's $8.5 billion offer to acquire the fashion house. Capri owns brands like Versace, Jimmy Choo, Michael Kors. Its rival Tapestry sells Coach and Kate Spade. For more, let's go to Andrea Felstead of Bloomberg Opinion. Andrea, when most people looked at this case, they said the FTC is likely to lose. Just what do you make of the ruling that the accessible luxury handbag market cannot merge?
It's a real surprise. After the trial last month, the feeling was that Tapestry and Capri put forward a really compelling case, and that would go in their favor. So this is, it's a real turn up for the books.
So tell me this then, you've got two very different brands here. You've got Coach and Kate Spade under Tapestry, and Capri has got, some would say, the vestiges of the 90s. There were good things in the 90s. Versace, Jimmy Choo, and Michael Kors. What happens in this space now? Because they're trying to defend competition, but what happens to these brands? Will they survive?
I think Tapestry's in a much stronger position. Its Coach brand, it's done a really good turnaround. It's performing well. One of its bags, the Empire, is one of the hottest bags around this season. I think Capri's in a much weaker position. The trial really showed just how weak the Michael Kors brand was. It needs a lot of work. And I think, it's not clear what's happened. Does it sell to private equity? Does it struggle on and try and turn itself around? Coach is stronger. I think Capri is much weaker.
Andrea, does this have implications for the wider consumer goods and fashion industry? You look at someone like LVMH that has really grown to its size because of the type of acquisitions it's done. Is this a new era in that regard?
Yes, I think it is. This was such a narrow definition. Nobody really goes out, to the mall and says, I want to buy an accessible bag. You look at, all kinds of bags. So, to narrow it down was really, really unusual. And the fact it's gone through is really going to be a factor in, every fashion deal that goes through now. I think we'll have this in the back of its mind.
Andrea, let's see how it plays out. But for the moment, some brands under pressure. Andrea Felstead of Bloomberg Opinion. Well, the leaders in policy and business are wrapping up the annual IMF World Bank meeting in Washington. Bloomberg's Lisa Abramovich sat down with the UBS CEO, Sergio Amotti. Let's take a listen.
At the end of the day, the cost is paid by the economy,
by clients. I think, of course, shareholders are suffering, but eventually cost of borrowing and the facility and the easiness of accessing credit is impaired. So allowing capital to freely move across jurisdictions creates less cost for the economy.
Is there a warning from the Credit Suisse saga? You've benefited from it on the other side. Your assets have increased. You delivered earnings that outperformed expectations. There is a sense that banks that seem okay are suddenly not okay in a very fast money world. Do you worry that that's the case elsewhere?
No, I don't worry, because if you look at the Credit Suisse situation, it was a very idiosyncratic topic that developed over the years. The business model was not sustainable. They didn't really have a great governance, and they benefited for too long from regulatory concession that should not have been granted, or at least not for so long. And that was a quite unique situation. If you look at what happened back in March 2023, banks, large banks, were actually safe haven, were part of the solution, in a sense, in the US, but also with UBS in Europe. So big banks were solid, and it showed that well-designed regulators can avoid the repeat of the financial crisis. But if you go too far, then you create costs, not only for shareholders, again, also for clients. When it's going to cost more to borrow, it's going to slow down investments, and so that's not the ideal situation.
There's a saying, and it's not mine, so you can't blame me or credit me, but that the United States innovates and that Europe regulates, and that seems to be the way and the path of travel, and it's the reason why a lot of people expect the U.S. to grow really significantly and less so in Europe. How much do you see that bifurcation continue with investor flows?
Don't worry, I'm not going to disagree on that. So,
okay.
It's quite clear. You saw it in the last 20 years. Numbers talks clearly, and the underlying trends seems to go still in the same direction. There is a desire in Europe to change path. You saw with the Draghi report, with a lot of very comprehensive report analyzing the state of Europe, with a lot of ideas that, unfortunately, are going to be quite difficult to implement. The reason is that you need 27 countries with quite different interests to agree on a common goal that may result in some of them losing short term for the benefits of the long-term benefit. And in this environment, it's very difficult to get voters to support any sacrifice. And so it's likely that you're going to continue to see the U.S. outperforming Europe.
UBS CEO Sergio Monti speaking with Bloomberg's Lisa Abramovich. This is a man that you've spoken to very often, Manus. I mean, what do you make of him saying that the fragmented banking is an issue in Europe and there needs to be more consolidation?
I find it so ironic that his former sort of cohort and buddy, Andre Orchel, who left so spectacularly from UBS, leading UniCredit, going after a bid after a German bank. But he has always been a voice that has said there needs to be more consolidation. Consistently, he has called for it. In the end of the day, he got his consolidation, didn't he, last year?
I was going to say, Lisa pointed this out.
Out of pretty rough circumstances.
Yeah, well, he really benefited from it. And there were a lot of arguments that maybe it's not good at creating this Swiss behemoth, but UBS has operated really well and cleaned up house at Credit Suisse.
Well, I can't wait to hear what he's got to say about the final banking the banking capital regulations here in Basel III, because he's always banged this drum about the uneven landscape between Europe and the United States of America. So if those capital requirements change, you're going to hear a lot more from Sergio Monti.
Well, certainly. I mean, we've already heard from Mario Draghi calling for more unions and European banks too. So conversations out there.
Okay, let's see whether Rochelle gets his hands on the German lender Commerzbank or not. Coming up in the show, we're going to round out the week for you. We've got more economic data. We've got Fed Speak on the slate for you. Every day, context matters with us on Bloomberg Brief.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Earnings season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer 5 below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
It's your Bloomberg Brief. Danny Berger and Manish Cranny in New York. A look at what's ahead. Let's get you set up for your trading day on this Friday. We get U.S. durable goods orders at 8:30 a.m. Eastern, then UMich consumer sentiment at 10 a.m. Then one last bit of Fed speak before the blackout period. That comes from Boston Fed President Susan Collins, 11 a.m. And another Treasury auction this afternoon. Manis.
Danny, micro movers, Tesla's down pre-market. I mean, it did rally 22% yesterday, so bear that in mind. You've also got that journal story reporting that Elon Musk having a number of contact and conversations with President Putin since 2022. Western Digital is up nearly 12%. The computer hardware and software firm beating earnings expectations, and it's day 2 of a brutal day for Newmont, extending their decline, the biggest fall in more than 2 years. Investors essentially souring on the earnings and suggesting that the top gold producer is going to struggle to control its mining costs. I mean, day 2, brutal moves yesterday. Danny, good morning.
Good morning, Manis. I have a feeling this weekend, I know what I'm doing. I think I'm filling out the diagram of baseball for you. Is that my fate this weekend?
Listen, we've already done this, which is what, $20,000 for a seat at the Yankees game behind the dugout. What I need to know is, where is the dugout?
Manis, you have so much to learn. Listen, not this one, it's too expensive. We'll go to a game soon.
Well, I think what's happening is we're starting to bring realism into the discussion. I mean, I think understanding the global energy system, the scale of that system, the important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investment that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs, and assumed or aspired that that would address the total set of the issues, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient, while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress.
There is a sense, I think, that the markets are increasingly worried about some kind of fiscal risk.
Companies are just a little less optimistic than they were a few quarters ago.
The issue of the year has really been whether we would broaden out, and I would say that is happening.
When you look at equities, we're going to get growth, right? So, forward returns are just going to be much more muted.
Corporate America is sitting there saying, I'm in a pretty good position. The economy's doing well.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City, let's get you to the weekend. From New York this morning, good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now with equity futures positive by 0.2%. Coming into Friday, poised to snap a 6-week winning streak, but looking to add some weight to yesterday's rally, with the Nasdaq up by 0.25%. Thank you to Tesla for yesterday's rally. This move is just unbelievable in the last 24 hours. A 22% move, the biggest since 2013, a $154 billion market cap move in a single session. As Ollie Crook said out of Berlin a little bit earlier this morning, bigger than the combined market cap of VW, Stellantis, and BMW.
And all roads lead to China, whether or not it's the industry growth, as you're seeing in Tesla, which had a completely blowout quarter when it comes to China. Dan Ives yesterday talking about that's going to be the growth driver for this company. But for everyone else, it's the downturn. It's the slag. You look at BMW, look at Mercedes, falling off a cliff in terms of deliveries of things like the S-Class, the Maybach, the things that used to be really insatiable for Chinese luxury market. Now no one's buying them. They're going to EVs. And if you're going to go for an EV in China, it's either BYD or it's Tesla.
It goes beyond the automakers. We saw this with Starbucks earlier this week. We saw it with LVMH just last week, saw it with Kering and Gucci as well. Next week's Apple. I just wonder if Apple can buck the trend here with this weakness out of China.
Well, it comes at a time where there's some reporting that Apple has been able to at least get some of these deliveries. There has been some demand on the new iPhone. And also, Tim Cook is in China. What is he doing? He's going out with, local social media celebrities, going out into cities, and on WeChat, taking these selfie videos, talking about the fact that he wants to maintain this present and he wants Chinese consumers to go out and buy iPhones.
Big week for tech earnings next week. We'll talk about Apple a little bit later in the program. The single name we've got to talk about right now, Capri. Check this out. This move, this stock, getting cut in half. We're down by 47% in the pre-market. The regulator wins, a federal judge blocking Tapestry's $8.5 billion acquisition, citing harm to competition in the accessible luxury handbag market. Sometimes the jokes write themselves.
So what's interesting about this is, one, I didn't even realize there was this accessible luxury market. And if you're Versace or if you're Jimmy Choo, are you looking at this saying, are we really accessible luxury? I thought we were supposed to be prime-time luxury. Also, why is this a market that needs to be protected so much? A lot of people are going to get burned on this. David Einhorn even wrote in his note that he thought that this would go through. potentially, why would they want to break this up? It doesn't seem like something that is really anti-competitive, and hedge funds took on more of these positions of Capri, which is now in free fall.
If this can't go through, what does it mean for Albertsons and Kroger? And what does it mean for anyone trying to put an acquisition together over the next several months? I imagine they're not going to bother. We heard from Brian Moynihan at Bank of America earlier this year, and this is what he said. Ultimately, holding back acquisitions, a lack of clarity about what it would take to actually get a deal done. What would they allow and what won't they allow?
That's a good question, and also the election. FTC Chair Lina Khan, already her term is actually up. She still stays on until there's another president. She can either get another term under Kamala Harris, so there's a lot of debate within the Democratic camp. Some of the billionaire donor class do not want to see her at the top of the FTC, and others like Alexandria Ocasio-Cortez, the congresswoman from New York, who says there'll be an out-and-out brawl if anyone tries to touch her position. But what about Donald Trump? This is the one individual, Lina Khan, that J.D. Vance actually thinks is doing a good job in the Biden administration.
Capri Holdings getting absolutely hammered in the pre-market. Let's get to the cross-asset board. I said equity futures were a little bit positive this morning on the S&P 500. Check out the bond market. Giving equities a helping hand. Yields are lower by a single basis point. The 10-year, 4.1960. The 2-year, down about 2 basis points on a 2-year, 4.06%. Looking ahead to the payrolls report. Sneak peek of our survey. The estimate, the median, comes down to 120. 120 is the median estimate in our survey. We'll be talking about payrolls a little bit later this morning. Coming up this hour, we'll catch up with Jim Bianco of Bianco Research as traders look ahead to the US election. Ed Mills of Raymond James as Harris and Trump head into hostile territory. And former IMF First Deputy Managing Director John Lipsky as the IMF's annual meeting wraps up. We begin this hour with the S&P 500 heading for its first weekly drop in 7. Traders dialing back bets on Fed rate cuts and weighing election risk. Jim Bianco of Bianco Research looking to the betting markets for clues on the election outcome, writing the power of the betting markets is that they can react quickly to new information, such as a political event and/or an October surprise. Trump is trading in all markets greater than 50% and has been in an uptrend for weeks. Jim joins us now for more. Jim, welcome to the program, sir. Let's start with the betting markets and compare and contrast them with what you're seeing in the polling data. How big is that spread?
It's not very big at all. Most of the polling, most of the election modelers have got Trump slightly above a 50% chance of winning the election. The betting markets are supposed to take that into consideration and anticipate what's coming next. As you mentioned, Trump is in an uptrend, and it's been in an uptrend, and he's trading in the low 60s in the betting market. And so that seems to be appropriate. And the reason I bring that up is if the markets are manipulated, you would say that they're at some unexplainable level, but I don't think that these markets are at an unexplainable level. And the last thing I'll point out is these are probabilities. These are in probability of 60%. A lot of people have a hard time getting their head around what that means, and I've used the analogy that it's less than a 3-point lead in a football game, and a stop and a field goal by Harris could win the game. So it's not that hard to turn it around. But Trump is leading, and the betting markets seem to be appropriately priced.
Jim, when it comes to the betting markets, though, we know there's one big outsized, almost whale when it comes to this French trader. Is that potentially why we see Trump moving ahead, just because there's these outsized moves in the betting market where it's not going to pick up in the polls?
Yeah, no, not really, because there's 10 betting markets. They're all kind of saying the same thing. The volume in the betting markets has doubled in the last week. It will probably double again next week. It always does in the final days before the election. There's going to be probably more whales that come into this market as well, too. It really looks like it's somebody who's got a strong conviction and put a lot of money on that conviction as opposed to a manipulator. And that's why I say that if you look at the polls, you look at the election modelers, where should this market be trading? About where it is right now. So it seems that everything's appropriate.
Do you think that financial markets are looking more at the polls or at the betting markets?
You know, they both kind of look at each other because there is, whether you're talking about Trump media, DJT, or you're talking about Bitcoin, or if you're talking about the defense stocks versus the technology stocks, they've all got some kind of embedded election play in them, and they're all kind of feeding off of each other. The bettors are looking at those markets are looking at the bettors, and so it's kind of a reflexivity that you see going back and forth between those markets.
So, Jim, we need to talk about how well priced the Trump presidency and/or GOP sweep might be. And with that in mind, and I've seen this a lot from the fixed income side, from a lot of strategists, asking themselves whether risks are skewed asymmetrically to lower yields because of how well priced the Trump presidency might be. How are you thinking about the balance of risks into the next few weeks?
Well, I think still the balance of risks is still going to be higher, because if we were to get a Trump presidency, and again, it's not a lock, you'd be looking at tariffs, and that's a form of inflation. You'd be looking at tax cuts. That's a form of stimulus. And you'd be looking at an economy that is going a lot stronger. And I think what the bond market has been bothered by has been the Fed moving 50 basis points in September. It's not 50 that bothered them. It's the signal, as Austin Goolsbee, the Chicago Fed president, said, that they've got hundreds of basis points to go. And I think the bond market's looking at this and saying, well, if we're going to get tax cuts, we're going to get potentially more inflation through tariffs. We don't need hundreds of basis points of rate cuts. That's just going to be piling on to potentially create more of a stagflationary type of environment. And that's why you've seen the 10-year yield move up 60 basis points since the day the Fed cut rates on September 18th. It hasn't bothered the stock market yet, but I think at around the 4.25 level is really anything above that is where the stock market really starts to run into problems with the rise in rates.
Jim, let's build on that. 460 that morning on September 18th, as you suggest, 60 basis point move. If you believe the path of least resistance is still for high yields from here, what kind of numbers are you thinking about?
Well, let's look at some of the numbers in the past. In April, we hit 475. October of last year was the high since the pandemic, where we hit 5%. I think we could probably go back and at least revisit some of those numbers, probably in the first quarter, if we do see this burst of activity come through tariffs, through a stronger economy. And let's not forget, whether who wins the election or not, that the economy has been picking up steam in the last few months. And now with the hurricanes and the strike, I heard you mention the payroll report, all that's going to get muddied for the next few months as we try and figure out what the path of the economy is going to be. But it was picking up before that. So all of that does augur for much higher yields. And that's why I think we could at least go back to the April highs by the first quarter, if not, press that 5% level that we saw last year.
Jim, let's get to the jobs numbers next week then. NFP about a week away. 120 is the median estimate in our survey. What's curious about this moment in the labour market is that jobless claims came out yesterday, back to pre-hurricane levels. And Jim, I'm trying to work out if the risk for next week is actually a stronger number, stronger than some people are expecting. What are you looking for?
Exactly that. I was very surprised by the claims number 2. If you look at during Katrina in 2005, a Hurricane Harvey in 2017, which came ashore in Houston, the claims numbers jumped 50,000, 75,000, and gave you a clue that you were going to see a very depressed payroll report. In both of those instances, the payroll report was negative for that month on the first release. But you're right, the claims numbers have actually returned to where they were pre-hurricane, returned to where they were pre-Boeing strike. I'm sure there's a lot of suppliers that are laying off now with the Boeing strike, returned to where they were pre-Stellantis layoffs that happened a couple of weeks ago. And that does open up the possibility that we might not see any weather impact in these numbers, and maybe a bigger number that might be truer reflection of what the economy is saying at a time when we didn't think that those numbers would show us a reflection of the economy.
Jim, is there a number in mind that you have that would put the Fed on pause?
On pause for November 7th, probably not. I mean, the market's, priced 90% chance that the Fed is going to move, and they've got 1 week before, they go into their quiet period. Even a strong number, if it's another 250,000, I don't know if that would be enough to get the Fed to pause on November 7th, but December would be open for a pause, even if they were to move in the next 2 weeks.
Jim, I think that is the question. What would it take to get Nikki Leakes to write an article to say that maybe this wasn't going to happen? Jim Bianco at Bianco Research. Jim, it's good to catch up with you, sir, as always. I mentioned the 120. That's the median estimate in our survey. Let me give you the low. The low is 70K in our survey. Wolf Research, Stephanie Roth, joining this program a little bit later. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. As you were discussing this morning, shares of Capri Holdings are plunging 46% pre-market. A federal judge blocked the company's planned $8.5 billion takeover of Tapestry. The judge said that allowing the owner of Kate Spade & Coach to buy the Michael Kors and Versace owner would harm competition, creating a company with 59% share of the accessible luxury handbag market. The ruling is a major victory for FTC Chair Lina Khan, who has tried to sink takeovers deemed anti-competitive in sectors from tech to groceries. Elon Musk has donated more than $130 million to support Donald Trump and other Republicans. Musk, who had only given modest political donations until this election cycle, funneled nearly $44 million to his America PAC in the first half of this month. That brings his total to $119 million. He also spent millions on other GOP candidates, helping him build a network of allies. Fast food chains are pulling onions from menus in several locations due to the risk of E. coli. Burger King and Yum Brands, which owns KFC, Pizza Hut, and Taco Bell, have removed onions from some stores as a precautionary measure. An outbreak that led to dozens of illnesses and one death were traced to onions found on Quarter Pounders in McDonald's. Burger King said that some of its onions are sourced from the same Colorado facility that supplied the affected McDonald's restaurants. And that's your brief. John.
Danny, thank you. Appreciate it. More from Danny in about 30 minutes' time. Up next on the program, heading into hostile territory.
It's the attention war. It's the attention war. You have to win the news day. And doing a big rally at MSG or doing a big appearance potentially with some sort of celebrity maybe in Houston is a way to do that.
We'll talk about that strategy up next on the program, live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Always on the heartbeat of the tech
spread across global markets. The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Equity futures on the S&P 500 up by 0.25%, poised for a weekly loss. We're down 0.9% through Thursday, looking to snap a 6-week winning streak, the longest weekly winning streak of the year so far. Up 0.25% on the S&P, down a single basis point on a 10-year, 419.60. Under surveillance this morning, heading into hostile territory.
It's the attention war. It's the attention war. You can go to Wisconsin 20 million times. You can go to North Carolina 20 million times. But these closing weeks of the election, you have to get into people's living rooms. You have to win the news day. And doing a big rally at MSG or doing a big appearance potentially with some sort of celebrity maybe in Houston is a way to do that.
Here's the latest this morning. Kamala Harris and Donald Trump heading deeper into their opposition's backyard in the penultimate week of the election race. Trump gearing up for a rally over the weekend at Madison Square Garden, with Harris heading to Houston, Texas, as both candidates look to grab attention in the last few days of the campaign. Ed Mills of Raymond James writing, the recent shift in sentiment and polling appears to favor former President Donald Trump. But given the surprise results of recent elections, we continue to view the presidential election as a toss-up. Ed joins us now for more. Ed, welcome back to the program, sir. Let's talk about this trend of going into your opposition's backyard. How powerful do you think that effort is?
So, John, I think it's an important way of trying to nationalize the race in the final days here. Going to Texas gives an opportunity to give the Senate candidate that is challenging Ted Cruz, Allred, a boost of support, but it also gives an opportunity for Kamala Harris to talk about abortion. We're going to see her next week on the National Mall. She is in the early stage of making that closing arguments for former President Donald Trump. What we're going to see is this stadium tour trying to show that his movement is truly national. So we have had a huge focus on the swing states, but in the closing days here, I do think you try to nationalize the race, make that closing arguments, and try to have that attention in all states and try to see if you can go on the offensive. See if there's some state that doesn't seem to be on anyone's map right now that could flip. We saw that in 2016. We saw that in 2020. Will we see that again here in 24?
For Kamala Harris, Houston makes sense because she's going to be joined by Beyonce. And as you say, she wants to talk about this issue of reproductive rights. It's one of the states that has one of the most stringent abortion rules in the country. But why is Donald Trump once again in New York? He was in the Bronx earlier this year. He was just in Nassau County. Why the Garden?
Well, you know, there are a number of things about the Trump campaign that I would not always say this is a traditional campaign. I do think he does want to have this rally at some of these major kind of venues, showing that there's enthusiasm. And I think part of what they've tried to have from the Trump campaign is saying that this is a movement that's national. And even though there are some states that they are exceptionally unlikely to win, there is a strong base of support. New York is also critical for the race for the House of Representatives. We look at New York, we look at California. There are 8 Republicans in toss-ups districts. If Harris is able to mobilize her base, she's probably going to see the Democrats win control of the House of Representatives. If Donald Trump is able to stabilize and kind of get his base out on Long Island and some of the close-in suburb districts in New York, maybe a couple of those Republicans hang on. Maybe Republicans hang on to their House majority.
Ed, you mentioned the Texas Senate race. This is Ted Cruz's seat that he is defending. This morning, I was looking at polling. It's Republican-backed, but they do some good polling. The Senate Opportunity Fund. They now have Nevada, Rosen and Brown tied. What are you seeing in some of the down-ballot ticket races?
They're really, really close. And I think what we have seen in Nevada is a consistent lead for Senator Rosen throughout this cycle. But with the early voting coming in Nevada, there's been a tilt to Republicans. At least that's what the nonpartisan prognosticators out there and some of the press that do a great job in Nevada kind of following that. So they're seeing a tight, maybe slight lead for Donald Trump in Nevada. So investing a little bit more, seeing if Sam Brown, the Republican contender, can maybe catch that seat, even though he's been down the whole cycle. At this part of the game, it is also a bit of a chess match between these campaign committees. Making a couple $1 million investment in one seat is trying to get that last push from donors to say, oh, we're on the offensive. People like to be with the winning team. And so the more you're on the offensive going into the final stretch, the more you can get your donors to pony up. Donors don't like to give money if they think the campaign's losing. And so, again, it's probably part of a national strategy by both the senatorial campaign arms, the Republican and Democrats, to say that there is an offensive opportunity. Is it for Texas for Democrats? Is it for Nevada for Republicans? Some of this is a little bit of bluffing at this point, but we have to wait till Election Day to see whose bets were actually the correct bet to make.
Ed, let's talk about that. How long it's going to take to actually find out the answer to some of the questions we have. One thing we know is that it will take a long time to count some of these votes. Ed, what are you telling clients about when you expect to actually see a result to this election?
So, John, my hope for this election and my hope for the markets is that what we've gone back and we've looked at many past elections, and while we were at 50-50 in the presidential race, and we look at a number of these cases in the Senate where those are kind of toss-up, which implies 50-50, they tend to all break in one direction. And so if we do have 7 swing states, we could see it break 5-2, 6-1 in the end. And if we are seeing that break in that direction, we will know probably early on kind of Wednesday morning after the election, kind of largely who's won. If it comes down to one state, that could be a week, that could be a couple of a month or more before we know who that is. I don't want to have that happen. Pennsylvania was called Saturday after the election. Nevada was called Saturday after the election. It was 16 days before North Carolina was called in the 2020 election. I don't want to be waiting 16 days. So my hope is that we do have a decisive break on election day, and it'll be pretty clear election night, if not early Wednesday morning.
At the most important county in Arizona, Maricopa County, their officials are saying it could take 10 to 13 days. What if this comes down to Arizona?
Well, that's the deciding factor where it's like, we did look back into 2020. We put out a note with a number of clients at Raymond James have been asking us, when will we know? So we get a chart of every single state that we got the calls. And it was interesting that most of the kind of swing states that are being discussed this year were called Saturday or after the election. My gut tells me that we probably will have a clear kind of direction on election night, if not early on Wednesday. It probably will take until a week or more for the final certification of these results. We just don't want to be back in the 2000 land where it gets litigated or we have election denial 2.0 because we have different vote counting methods, which kind of will favor one candidate early versus the other. There are blue mirage states, there are red mirage states.
Is there any concern that it might take days for some of the down ballot seats?
Yeah, I mean, I think we could be in a scenario if it's a very close House of Representative race. New York and California, as I mentioned, are two states that could determine the outcome of this majority in the House of Representatives. New York and California are really slow to count votes, especially on absentee ballots. And so they're not normally swing states. They're not going to be swing states at the presidential level, so they don't get the attention. But on some primaries where they have gone into kind of a very close final count, it's been weeks at times before we know the final result of some of those House races. It's arguably unacceptable, but that's just the reality of the way their systems are set up. So we probably know kind of the result of the presidential election before we know the results of the final House and Senate races for 2024 here.
Ed, we all agree with you. The fact that this has been such an issue for such a long time and still hasn't been addressed is unacceptable. Ed, thank you, sir. Ed Mills of Raymond James there with the latest. The number one issue for market participants, obviously, the result. The number two issue, the delay. If we get a delay, that's a big focus for a lot of people in this market.
Well, Maricopa County is one of those issues. This is a county that has millions of people in terms of population, 10 to 13 days. What if it comes down to that? We're going to be here for a while.
We're going to be sitting up all night and waiting for that? We're not. Let's get you an update on what's happening in D.C. Up next on the program, Lisa joins us alongside the former IMS First Deputy Managing Director, John Lipsky. That's on the other side from New York. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Coming into Friday, poised to snap a 6-week winning streak on the S&P 500. Equity futures this morning positive by about 0.25%. Down on the week through Thursday by 0.9% on the S&P. On the Nasdaq 100 this morning, up by 0.3. On the Russell, a bit of outperformance, up by 0.5. Let's talk about the moves in the bond market. The 2-year and 10-year through yesterday, up by double-digit basis points through the week so far. We pulled back just a little bit, down a basis point, the 10-year 4.1980, the 2-year at 4.06. The next stop for this market is a week away. It's the payrolls report, and the estimate in our survey is 120. A lot of people lowballing the jobs number next week because of the hurricane impact, but jobless claims, I think, really screws some of the thinking up. Jobless claims dropping back to the pre-hurricane levels, and this is what Stephen Stanley of Santander had to say. The impact of Hurricane Helene seems to be dissipating more rapidly than feared, which is a positive sign that the economic impact of the hurricane is not mushrooming through the region. Your 10-year, 4.1980. Let's get to foreign exchange. Sneak peek of the euro, then we'll dig deeper on dollar yen. Let's start with the euro. Euro dollar 108.26, just about unchanged. Dollar yen looking at 152. Dollar yen climbing for 4 consecutive weeks, the longest streak going back to April. We went through 153 a little bit earlier this week. Under surveillance this morning, the Bank of Japan Governor, Kazuo Ueda, signaling the central bank won't hike interest rates next week, saying the BOJ has time to consider its next policy steps, even after the yen fell to an almost 3-month low.
So that decision is coming between 2 elections, one at home in Japan for them, and then the U.S. presidential election. And Ueda spoke about this. Quote, "We need to look at the whole picture, diligently examine impacts on Japan's inflation from not only a weak yen, but a view on the U.S. economy behind it, which may be related to the U.S. presidential election." They don't want to touch this until they have the outcome in both the United States and in Japan.
The week of the Federal Reserve decision back on September 18th has turned out to be a really pivotal week for this market. They reduced interest rates that week by 50 basis points, and the consensus on the street was that we'd seen peak yields, we'd seen peak dollar, yields would roll over, the dollar would weaken, and yen strength would continue. Dollar yen bottomed 2 days before that decision at 140. Since then, yields are up by something like 60 basis points, and dollar yen's back to 152. These are some big moves.
These are some big moves, and the problem is it's not just the economics that people are starting to price in. People are starting to price in the outcome of the U.S. presidential election. Yes, the polling is on a knife's edge. When you look at the betting odds, we just talked about this, Jim Bianco, they're looking at not just a Trump win, potentially a red sweep, and that is trickling down into the financial markets.
Dollar yen, 151.97. Anne-Marie, I think we all want your thoughts on this story right here. The Wall Street Journal reporting that Elon Musk has been in regular contact with Russian President Vladimir Putin since 2022. Putin reportedly asking Musk to avoid activating his Starlink satellite internet service over Taiwan as a favor to Chinese leader Xi Jinping.
So that was the line that stuck out for me. We know that Elon Musk has been in contact with Putin, at least one conversation. Musk has said that in October of 2022. The fact that there's maybe more conversations, that is going to get the backs up of a lot of individuals in the national security space, even though they technically understand that Musk has this really outsized place in U.S. society because of the contracts he has with the Pentagon and SpaceX. But the fact that Putin asked him not to activate Starlink over Taiwan as a favor to Xi Jinping. Now that means that Musk is not potentially helping or in contact with one individual that's a U.S. adversary, Vladimir Putin, but a second potentially, Xi Jinping. That is going to be a cause for concern.
Interesting timing for this to come out a week before the US election at a time when Elon Musk has been campaigning pretty closely with the former president.
Very closely, and also at a morning when yesterday we got fresh data on how much money he's throwing his support behind the former president. It's now something like $150 million for the president and also down ballot Republican races. Not only that, he's not just throwing support around the individuals that want to seek higher office, he's also talking about $1 million apiece for registered voters, which apparently those checks have gone out, even though the DOJ has a warning to Elon Musk saying this might be illegal. Stop doing it.
That's the latest from the Journal this morning. Let's get to the latest in this equity market. Two stocks to watch. A federal judge blocking Tapestry's planned $8.5 billion acquisition of Capri, saying the deal would harm competition in the market for accessible luxury handbags. Capri is down by 47% in the pre-market.
Two thoughts. One, we need to understand what accessible luxury is. I think Donatella Versace would disagree with the FTC. I want to bring you this quote from an individual at the FTC. These bags are a product which millions of people rely on throughout their daily lives. The decision will ensure that Tapestry and Capri continue to engage in head-to-head competition to the benefit of the American public. Think about that. Millions of people rely on throughout their daily lives. Do millions of people actually rely on a Michael Kors handbag, a Coach handbag? Honestly, are they serious?
This can't get done. JetBlue deal can't get done. Kroger's looking to make a deal. How is that deal going to close if this can't get done?
Nothing's getting done. Don't even try until after the U.S. election. That would be my advice.
And let's see if we actually get a change after the US election, because that's another debate altogether. I want to turn to the annual IMF meeting. It's wrapping up in Washington, D.C., with the impact of the US election one of the key topics discussed among world leaders.
What happens in the U.S. matters for the U.S. and matters for the whole world. The U.S. economy is very strong right now. At the same time, we are seeing inflation coming down, and our expectation is that it will continue to do so, and the Fed will continue to cut rates. Now, if there is a much more expansionary fiscal stance, that could move the argument in a different direction.
Joining us now from the nation's capital, Lisa, alongside a special guest. Hey, Bremo.
Hey, how's it going, John? I am indeed here with the person who formerly was in the role that Geeta was in. That is John Lipsky. He is currently a distinguished scholar at Johns Hopkins and was at the IMF from 2006 to 2011 as that first deputy managing director. I am curious, especially relative to what she was saying, Geeta, how much is the election hanging over these meetings with people not really understanding what to even say about it?
Exactly. We know it's potentially an important inflection point, depending on which way U.S. policy goes in many areas. However, there's so much uncertainty about the outcomes and what a winning candidate might actually do that no one really knows what to say.
Which is the reason why I think a lot of people are having trouble coming up with paradigms, especially given that free trade used to be one of the benchmarks to really understand the pace of growth and the potential of growth. As there is this increasing acceptance of protectionist policies, how much is the IMF just screaming into the wind, sort of trying to just ascribe to these free trade policies that nobody really is listening to?
Well, it's a complicated issue, but let's start the following way. Let's look at what's been happening. Actually, there was an inflection point at the global financial crisis. At the formation of the Group of 20, the leaders pledged no new protection measures, and in fact, they haven't honored that. They've increased protection. For the 60 years prior to the global financial crisis, trade grew faster than global GDP. In other words, trade boosted growth. Since that time, trade has been growing more slowly than GDP. And even now, with all the increased protection so far, trade in goods has flattened. Trade in services is growing, and digital services trade is booming. So it's a complex story, and hence the real issue is, are there going to be really serious protectionist measures put in place more generally? And this would be a huge challenge to the international system. For the IMF, if you look at the Articles of Agreement, the constitution of the fund, and say, what are the purposes of the fund? top is creating a payment system that will support the growth of global trade and hence global growth. Secondly, to provide support of all kinds, including financial support, to countries with balance of payments problems, so they will, to help them avoid adopting protectionist, among other things, protectionist measures.
So if one of the major members of the IMF, namely the United States, ends up putting in place a number of these protectionist policies, what is the IMF's role? How much does that undermine its relevance?
Well, the IMF will certainly have something to say about policies like that. So far, as I say, the trade is still actually growing. So far, there's been more talk. Obviously, there is real and legitimate concern as growing out of the pandemic in terms of resilience of supply chains. There's concern about national security, et cetera. Those are going to have an effect. But it's so far unlikely that anyone is taking measures that are seriously disruptive to the system. And of course, the interconnections among our major economies are so deep and so thorough, it seems very hard to be able to disrupt them without disrupting the economy.
And this is one reason why, even though we hear a lot about the separation of Chinese and U.S. economies, we still hear from businesses that are expanding in China. We still hear about significant revenue streams that are taking place there. At the same time, while these IMF meetings are taking place, there is a meeting going on in Kazan, Russia, where you have Brazil, you have Russia, you have China, you have Vladimir Putin and Xi Jinping and a lot of the different delegates from Russia and China there, not here. How significant is that?
Well, of course, those are the political leaders. And here in Washington, all the finance ministers, all the central bank governors, including of all those countries, are here in Washington. And nobody's talking about withdrawing from these organizations because, in fact, in practice, they're critical gathering places, critical place for discussions about important policies. Now, certainly, it's not a coincidence that the leaders of the BRICS, the new expanded BRICS, are meeting at the same time. I think they want to send a symbolic message that says we need and deserve a bigger voice in the international system. What they're not talking about is withdrawing from that system in any serious way.
The other issue that's really been talked about here is the deficit. As people are watching the U.S. deficit expand, and the U.S. only benefit from it in terms of faster growth, is there a sense that it is for now, and that in the election, after we get the results, there could be a real reckoning in a material way?
Well, you never know. What the IMF has pointed out in its Fiscal Monitor benchmark publication is the growth in public debt basically everywhere, and we're now reaching levels that have no historic precedent. It's as we soon past 100% of GDP in public debt in major countries, clearly there is a risk of fragility, there's a risk of a negative reaction, and certainly a rise in real interest rates could put a significant dampener on growth. So we have to watch it, but the problem is debt has grown faster than had been anticipated and faster than past traditional lines of where trouble starts. And it hasn't started so far, but it's so far so good. Not that we all know that there's going to be a straw that breaks the camel's back, but in fact, markets do have turning points, and we have to pay attention.
Yeah, is it frustrating for people that we're worried about the deficit? You hear all these warnings. It's unsustainable. It's different this time. And then people say, well, look at the market. It's not concerned. Is that concerning to people, frustrating, that no one's going to take it seriously until the market really holds Washington's feet to the fire?
Well, not just Washington. That's one of the points of the IMF's Fiscal Monitor. This is generalized. Now, the pandemic, for example, was more or less unprecedented. What you had was a shutdown of the private economy. So government spending was necessary to compensate. It wasn't standard stimulus. It was completely different. So it's understandable that the growth in debt hasn't been as deleterious because it actually supported the economy. But it would be dangerous to assume you can just keep going at a full employment economy with large fiscal deficits and assume there's never going to be a price to pay.
John Lipsky, wonderful to speak with you here in Washington, D.C. Thank you so much for your time. Really appreciate it.
Lisa, it's always a pleasure.
John, I'm going to send it back to you.
Thank you, Lisa. Thank you very much. We'll catch up with you a little bit later on this morning. Up in the next hour, Lisa catching up with the Citigroup chair, John Dugan. Do not miss that conversation. With an update on stories elsewhere this morning with your Bloomberg Brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John. Negotiators from Israel and Hamas will meet in the coming days amid renewed efforts to end the ongoing war. Speaking in Qatar, Secretary of State Anthony Blinken said the U.S. is exploring different options to secure the release of hostages held in Gaza. Israel said the chief of its Mossad intelligence agency would meet with the main negotiators for the U.S. and Qatar next week. Fast food chains are pulling onions from menus in several locations due to the risk of E. coli. Burger King and Yum Brands, which owns KFC, Pizza Hut, and Taco Bell, have removed onions from some stores as a precautionary measure. An outbreak that led to dozens of illnesses and one death were traced to onions found on Quarter Pounders burgers at McDonald's. Burger King said some of its onions are sourced from the same Colorado facility that supplied the affected McDonald's restaurants. And sorry, Anne-Marie, if you want to go to this year's World Series, you better be ready to pay up. The cheapest seats at Game 1 at Dodger Stadium start at around $975. Tickets are even more expensive in New York. Demand for the games in the Bronx is about 40% higher than LA, that according to StubHub. Game 3 at Yankee Stadium Monday is poised to be the most expensive ticket in World Series history. The average price nearing $2,000. And if you want to sit behind home plate or above the Yankees dugout, that is going to set you back more than $20,000. And that's your brief. John.
Danny, thank you. $20,000. I knew this would be expensive. New York, I think, has the highest concentration of millionaires of any city on the planet, but $20,000.